There's all of these other potential growth drivers that you just can't model out. SMR demand, financial demand, sovereign demand, inventory buildouts. All of these things are adding to the demand. You can't model them out, but it's not going to be zero. The domestic uranium production in the United States looks as good as it's looked since the 70s. Midterm to long term, we are going to see utilities have to take action on this in the United States. This is going to squeeze U308 a little bit more. The chance that Putin or the Kremlin tells 10x no more deliveries to the US, that is definitely a chance. It's a major disruption, and what happens in the United States affects the entire global nuclear fuels market because it's 25% of global demand. It's the biggest market in the world.
All right, Justin, we're shooting this kind of last minute. Yeah, you've given me about 20 or 25 minutes of your date, for which I'm grateful, and I want to make the most of it here. What's going on with this Russian ban thing? That's what I want to talk about. We've been hearing about it for the last, 2 years now. It's always been sort of around the corner and a lot of speculation around it. Seems like it's here now, but you said on Twitter that many of us might be misinterpreting it. So talk to me about that. What exactly is happening? What are the media and you twits missing here?
Sure. I think probably to start would be to give a little bit of background context, which is something like this, let's just say support of the domestic nuclear fuel cycle has been on the table in various forms for many years. So going back 6 years, we went back to 2018, Section 232 petition. This was filed by Energy Fuels and UR Energy back in 2018, and they were petitioning for 25% of the domestic uranium needs to be mandated to be purchased from domestic producers. That went to President Trump at the time. He said, yeah, I'm not going to do this, but what I will do is establish a nuclear fuels working group that can dig into this issue, which is largely the issue that they claimed was that barely the United States domestic industry had largely been killed, especially on the uranium mining side of things because of a decade plus of low prices. And of course, high reliance on potential adversaries. Like in most cases, they were discussing Russia, right? So this goes back very, very long, and that nuclear fuels working group conclusion took about a year. That came to the president's desk in 2020 and just fell on the back burner. Nothing happened. Election year, COVID, everything else that happened, it just pushed to the back burner. Nothing came out of that working group. But that was studied. Members of the working group are largely still involved in some way or another in the existing administration's Department of Energy, Department of Commerce. And so a lot of these folks are lifers. These are career DOE people. And this has been sort of on an agenda of some form or another for many, many years. Now, the conflict in Ukraine, the invasion of Ukraine by Russia 2 years ago, certainly put a brighter light on the situation. So now it doesn't look good at all for the United States electricity industry, 20% of our grid being nuclear, being highly reliant on imports of uranium coming from what is now a direct adversary. So and this is obviously a situation that the current admin is wanting to do something about. But the bright side of this is that there is funding that is available now that this has been passed. Doesn't have the president's signature yet, but it's expected pretty much any day now. That this 2.7 billion in funding was contingent on a ban taking place. So, and this funding is going to support primarily conversion and enrichment in the United States in some form or another. So that's definitely needed. And that's certainly a very positive element of this. So really what this legislation is, this is the House Bill 1042. This was passed by the House back in November. So 6 months ago, this passed by the House. It was fast-tracked through the Senate, which means if legislation is going to be fast-tracked, it has to be unanimous. It doesn't take a 2/3 vote like a normal legislation does. And the fast tracking didn't work. There was one senator, Senator Cruz from Texas, that blocked it for reasons apparently unrelated to the legislation itself. Supposedly it had something that was personal with another senator, just ridiculous. But either way, it was held up, kind of got quiet. We didn't hear much about it for quite a few months, although the industry analysts, the UXCs, the trade techs continued to discuss it. Why do they keep discussing it? Because it's on the utilities' minds, right? The US utilities especially, but global utilities as well, because the effects of this are going to affect the fuel cycle globally. I'll explain that in just a minute, but really what uh, the UXC continued to discuss it because it was top of mind for utilities. And a lot of utilities not only were concerned about their future reliance on legacy contracts with Russia, but also just sitting on the fence in terms of signing new long-term contract agreements, waiting for this potentially large disruptor to drop. So now that it has, we think that we're going to see some increased activity in the term market and just across the physical market, generally speaking. So just Tuesday afternoon actually Tuesday evening, following a meeting that took place in Washington, D.C. between the Department of Energy, the Nuclear Energy Institute, and representatives from the United States nuclear utilities. This was on Tuesday. This meeting largely was to discuss the waivers that are allocated into this legislation. So basically, the legislation says starting 90 days from the president's signature, it will no longer be legal to import Russian enriched uranium into the United States. But going out to December 31st, 2027, they're offering waivers for utilities to access if the utility can prove that they have looked under every rock and every stone and cannot replace that material from that expected delivery ex-Russia. So the waivers process was explained thoroughly to utilities. From what we understand, mood in the room, utilities not happy about this. Primarily, it's a cost reason, and of course, this muddies the waters. It certainly throws some sand into the gears of just the general flow of materials and the way that utilities will procure uranium. So there's some more detail I can give you, obviously, but now that this is passed, it just awaits the signature. 90 days from that, they can't do this anymore, period. And they have waivers that are granted on a discretionary basis if and when they can prove that they have looked at any price to replace this material outside of Russia. So it's not, oh, what if we have to pay this amount for SWU? Sorry. What if we have to pay this amount for uranium to feed into a contract to replace this? Sorry. It is what it is. You guys have made your decisions, and now you have to live with them. So the waivers are not to protect cost overruns. That's a really important thing to understand. The waivers are only there if the utility can prove to the Department of Energy that they cannot physically replace material that is expected to be delivered from Russia in time at any price from any other sources.
This kind of sounds like an episode of House of Cards, especially when we talk about what's happening with the senators and whatnot. Um, with a bunch of things to touch upon there, especially that last part, but let's maybe take it all the way back from the top of how much of an effect on supply demand dynamics within the US do you think this is going to have?
It's hard to say. I think very, very near term, it's not going to have a lot of effect because the legacy contracts going out into the future, yes, there are plenty of utilities that still have some exposure to Russia. There's a few that have a lot of exposure to Russia. The cap within the Russian suspension agreement, which is 27% was the peak, I believe, last year, of a percentage of total needs on an annual basis can be imported from Russia. So it's not per utility. So some utilities actually have significantly more exposure to future deliveries and are going to have to act. But in the meantime, it's going to take a little bit for the dust to settle. It's going to have 90 days from the signature still. Certain utilities did pull forward as much material as they could in the last couple of years from Russia. Certain utilities bought Chinese enriched uranium in Q4 of last year. It wasn't a lot. It was about 4 to 5 million pounds. And they pay a 30% tariff to bring material in from China. So that was sort of that's the closest thing that I could call quote unquote panic is just, okay, they just passed the House. Let's get what we can get right now because we don't know how soon this ban is going to come into effect, right? So the utilities, essentially, long story short, is they did pull forward some material and they covered themselves a little bit better in the near term through those actions. So near term, hard to say. I think we're already seeing a little bit of movement in the physical market based on this. Part of that has to do with the fact that the equities are risk on and SPUT's raising cash and buying uranium. So that has an effect as well. But midterm to long term, we are going to see utilities have to take action on this in the United States. And the global effect of this is that the suppliers of enriched uranium are few and far between, right? And Russia's the biggest player. Chinese, like I mentioned, the Chinese enrichment largely is for their own domestic uses. They do sell a little bit on a global basis, but to import that from China has a very large tariff, 30%. So it's not a very long-term solution. The other sources, Urenco and Orano, we're going to see pressure being put on these two entities for conversion and for enrichment that wasn't there before. And that's going to tighten things even further in these already tight markets.
It's also not a straightforward calculation as far as I understand it, because again, please correct me if I'm wrong, but there is also a delta between the efficiency with which Russians basically enrich uranium versus how we do it in the West. It's going to be different facilities and so on and so forth. It's also going to just take more energy and on and on and on. I mean, there's a bunch of things going into the calculation, right?
Yeah, for sure. There's some elements to these enrichment contracts with Russia that I find interesting, which is Russian SWU contracts have something called return feed. So you would actually receive the enriched uranium delivery from Russia prior to delivering the feedstock for that enrichment process, which is backwards from what you would do if you were dealing with Urenco or Orano, for example. If you have a SWU contract, an enrichment contract with Urenco, you have to provide the UF6 up front. So, and then they actually literally spin the material that you fed into that process, right? So with Russia, you have your contract for enrichment, they send you the EUP, and then you return the feedstock to them after that delivery. So there's certainly a big question mark around, okay, how many of these future legacy enrichment contracts going out for the next 3, 4, 5 years with Russia by US utilities, how many of those utilities are going to have to renege on those contracts and sign contracts elsewhere? And how many of those shifted contracts already have feedstock purchased and ready to deliver into those contracts? So there's a lot of questions out there. Certainly, some of these contracts are with utilities that are going to have to sign new contracts, new enrichment contracts with Urenco or Orano, and don't have the feedstock, right? So if you're expecting EUP delivery in 2027, maybe you're not sitting on that UF6 already. That's the case, and you have to sign a new enrichment contract at much higher tails assays. By the way, to your point, the Russians have the most capacity. Their centrifuges typically can spin to lower tails assays than the Western centrifuges. And while their operational tails assays right now are not necessarily extremely low, they're lower than the West. So if you sign a new enrichment contract with the West, you're looking at high 0.2s, low 0.3s, compared to guaranteed contracts signed 2, 3, 4 years ago with 10x, you're probably looking at 0.2. So if you have to buy feed for these new 0.3 enrichment contracts, you're buying 20 to 25% more uranium. And there's basically no UF6 available. So to the extent that new enrichment contracts have to be signed, feedstock has to be bought in the form of U3O8 and has to be converted. Even though conversion is extremely tight, there's arguably more spot conversion available than there is actual UF6 sitting in a can. There's just none. So it complicates and tightens the physical market even more than it already was.
And I'm also thinking again just about the long-term implications of it all, because once the president signs it, it's being signed into a law. I mean, it's not a recommendation; it's an actual law. So I'm thinking about actual physical shortages. There's just not enough EUP for utilities to use to power those power plants. But we did see a similar ban with other commodities that then those commodities will get rerouted through China and Dubai and India, whatever it might be, and then they end up in the US nonetheless, or with the Canada thing and all that. Is this a possibility here? Like, do we see actual physical shortages, or is this going to get solved through one or another creative solution, if you will?
I don't know necessarily that we're going to see actual physical shortages, but also the fungibility of EUP is also complicated, right? Because the enrichment level is unique to each reactor. So the utility, if you want to go out and buy spot EUP, it has to be within range of the enrichment needs of your facility. So it's not fungible. It's not nearly as fungible as UF6 or U3O8, which are technically fungible. With all of that said, there's kind of a chain of custody across the fuel cycle. So Russian material is Russian material. Now, can you swap it? Yes, you can. With all of that said, who has a bunch of EUP on hand that's ready for sale? Basically nobody. Japanese have some, but that's being held more tightly recently. And They're still owed uranium from loans that they have placed out. So there was a decent amount of loans that took place over the last 10 years from Japan. Rather than selling material into the market, loaning it out, it has to be paid back. Some of that still has to be paid back. Like I mentioned, China has some EUP, but most of that is going to their domestic program. The stuff that is available that might be sold on the global scale is very expensive for the US to import. So Russian swaps with China isn't really a great long-term solution because of those tariffs. And there just isn't a lot of EUP kind of above ground mobile inventory. So the swap and enriched uranium is the primary product that the United States would import from Russia. So U308, that's a whole different story. This is going to squeeze U308 a little bit more because of the shifting of these contracts and the higher tails assays that'll be necessary. The positive part of that is that this funding should encourage and support expansion of both enrichment and conversion in the United States. Hopefully, we will hear about that relatively soon. I would love to hear something in the next 6 months saying funding is there for Honeywell to expand ConverDyn, which we know that they can. They can expand, they can almost double, they can increase their production by 70-80% with reasonable CapEx and reasonable time frame. But they don't want to kill their own business. So they're not just going to do it voluntarily. They'll do it with appropriate funding. Ideally, that would come from long-term contracts from utilities, but they still have yet to say that they have received sufficient long-term contracts for conversion to justify expansion. They went through an extremely difficult period of time in the last decade from having to shut down their facility. So they're not about to jump into that unless the funding and the security is there. With that said, Honeywell is a government contractor. So if the US government says we're expanding conversion, here's the money, it's probably going to happen. Yeah, the swap thing is just, it's not an easy or quick solution. It just isn't, because the sources of EUP are very few, and those sources are relatively complicated.
I'm also now starting to rethink how immediate of a reaction this might have, because you said it's not going to be an immediate reaction, but what if, and this actually Yellow Bull on Twitter put it nicely, saying that there is a possibility that Russia could do sort of the old you can't fire me, I quit type of thing, where they say, oh, all the contracts that we had before, we're not going to wait till 2028, no waivers, no nothing, we'll just stop exporting today. The US gets nothing basically within the nuclear cycle from us. Do you think that's was it a probability, a possibility?
I would say it's a possibility. It's sufficient enough of a possibility that the risk of this happening, of let's say Russia actually cutting off exports in response to this sanctioning, the risk of this happening is sufficient so that US utilities are not going to sit on their laurels with confidence relying on the waivers process, right? So they're just, if you've got a delivery for 2027, you're not going to sit around and just pray that the waiver is going to be granted. You're going to pretty quickly, I would say, and because those waivers only go out to the end of 2027, 2028 deliveries and beyond are over. So utilities are going to have to source, if you have a contract with Russian deliveries 2028 and beyond, you've got to find that elsewhere. So we're really talking near term in terms of having to shift those, shift the deliveries, shift the contracting, and whether or not the reliance on waivers is going to be a significant thing. It's looking like it's not, and the reaction from the utilities leads me to believe that it's not. With all of that said, I don't think that 10X, the Russian state-owned enrichment corporation, they're not going to cancel these contracts voluntarily. They're not going to make a political statement. They're acting on the world stage. They've never missed a delivery ever. They want to remain as a reliable producer on the world stage. And so they're not going to I mean, look, anything's possible. I don't believe that they're going to cut off exports. That decree is going to have to come from on high. With all of that said, things continue to escalate. It's basically a proxy war. So the chance that Putin or the Kremlin tells 10X no more deliveries to the US, that is definitely a chance. I don't know how to handicap that, but it's higher than 0% chance. And it's significant enough of a possibility that it's mentioned almost on a weekly basis by UXC. Trade Tech has discussed it. certainly the utilities are concerned about that possibility. And so it's almost like this legislation, even though it's including the waivers are almost irrelevant because of this risk and the difficulty of going through the waivers process to only end up with a discretionary potential waiver coming from the DOE. They can say, okay, they might say your process is not sufficient to show that you worked hard enough to source this material ex Russia. Sorry, no waiver. And that's not a risk you take because your operations are so important. Your operation, you cannot not have the fuel that you need, and EUP is one step away from that fuel. They import the EUP and they have it fabricated here in the States. In that process, 6 months, and then you've got your fuel. So you're not going to put your facility at risk on these maybe waivers or the chance that Russia might actually cut off those exports. So it's a major disruption, and what happens in the United States affects the entire global nuclear fuels market because it's 25% of global demand. It's the biggest market in the world. So it's quite the disruption.
What do you think the implication? I know you have your preference, but does this whole thing that's happening make you less bullish Kazakhstan and more bullish US or North American producers as a whole?
Not necessarily. I think Kazakhstan is going to remain a very reliable producer, and they're slowly kind of figuring out the Western delivery situation. Technically speaking, they've still been able to deliver material through Russia. Whether or not that gets further impacted if things continue to escalate, I don't know. But I think they're going to struggle to maintain and increase production, but that's kind of besides the point. I don't think that this particular ban necessarily makes me less bullish Kazatomprom or Kazakhstan, generally speaking. It's, they clearly have a lot of influence from Russia still. This big new deposit, the Bunovskoye 6 and 7, that's supposedly going to be, 2/3 of their expansion capacity. It's crawling along. It is in very, very early stages of development, and the Russians are pressuring them to get it developed. And it's a more complex deposit. It's deeper, it's higher in carbonates, it's going to take more acid. But there's pressure coming from Russia, and that pressure was probably there when they did the deal with Rosatom with that new joint venture. So clearly there's influence there. Doesn't give me the warm and fuzzies necessarily, but it's also probably pretty conspiratorial to think that Kazakhstan uranium is going to ultimately be impacted by this Russian ban or further types of Russian sanctions from various other countries potentially going out in the future. I don't have a crystal ball, but as of now, Kazakhstan is doing what they can to distance themselves from Russia, and that's been the case since the invasion. But
Hmm.
clearly, the influence and the involvement is still very substantial.
Do you think the chance for like government grants and stuff like that you talked to me about, do you think that the chance for that being present there um, makes the value proposition for domestic uranium producers or soon to be producers or aspiring producers better?
I think that the domestic uranium production in the United States looks as good as it's looked since the 70s, right? It hasn't looked this positive in a very, very long time. With all of that said, the funding, this 2.7 billion in funding, is entirely to support conversion and enrichment. Even though there is already other funds that are allocated, I believe it was for 10 years starting last year, that was for the domestic nuclear stockpile, uranium stockpile. They already started purchasing
Mm.
uranium last year from that for that stockpile. That's going to continue going forward. So there is government support there. Of course, supporting the fuel cycle in the United States is generally bullish for everyone that operates within the fuel cycle in the United States. But the funding that's there in this funding that's being unlocked by this ban is not directly in support of United States domestic miners. But there is the potential of further purchasing on behalf of the US government for various other purposes, let's say, that has to come from domestic production. That's something that we're still working on. I can't really say much more about that at this point, but there's a lot of reasons to believe that Western production, generally speaking, and especially in the United States, is potentially a place to be for investors, and it's possible we'll see premiums on that material at some point.
Do you think, and I'll let you go because I know you absolutely have to go, but do you think there's any implications to SPUT from this? Like, do we go to a spot where we have a force majeure or the government comes in and says there's literally no uranium? We have this new law. Utilities cannot source anything from anywhere. We need this utility away from you, and you have to sell it to us at price X.
No, I don't think that happens.
Hmm.
I'm not in the camp that we're going to be in a situation where there's literally no uranium anywhere. There's uranium everywhere. It just takes time and money to pull it out of the ground. And we're seeing the gears turning on the production. We're starting to see a little bit come from here, a little bit come from there. That's going to help on the supply side, but demand is also growing. So look, it's tight. I think that it's tight enough that we're going to see continued upward pressure on the price. Do I think we're going to see force majeure? That's hard to say. Maybe on individual utility or producer basis, that could happen in the next 2 or 3 years. I'm not going to say it can't, but I'm generally speaking not in the panic is about to hit camp. I'm looking primarily at the overall supply and demand picture, which looks like multiple years of supply deficit, even if you bake in the projects that are supposed to come online, that they do come online on time.
Mm.
With all of that said, yeah, I'll just leave that there.
This has never been the thesis. The thesis has always been supply supported, and it keeps being supply supported until price is high enough to solve that. That's basically what I'm getting out of this.
Yeah, absolutely. That's right. The other part of your question was regarding SPUT. SPUT's obviously holding a lot of uranium, right? 63 million pounds or something like that. It's a lot of uranium. SPUT, I don't think will ever have some sort of government intervention to shake those pounds out into the market. I don't think they're ever going to sell those pounds in the market. The only situation I think is potentially viable for those pounds ever reaching the market would be if somebody buys SPUT and decides to sell those pounds. And that will only come from a shareholder vote. So 2/3 of the shareholders have to vote for that. And that obviously would be at a massive premium. And honestly, if there were an offer for SPUT at a 50% premium from wherever it's trading right now, whatever it might be, to sufficiently to garner 2/3 of shareholders to vote for it, that would be unbelievably bullish signal that whoever is trying to source this uranium would be on behalf of a utility or a sovereign or something like that, would dictate exactly how tight the market is if that were the case.
Yeah.
Not necessarily expecting that to happen, but I could see that might be a possibility if things get dire on the supply side at some point. And that is certainly possible because while we have supply starting to respond in small amounts in various places, right? We've got Orano operating McLean Lake with Sabre. They're pulling 500,000 pounds a year out of that in Saskatchewan. Encore's producing a few 100,000 pounds this year. Maybe they'll hit 1,000,000 pounds next year. Boss's Honeymoon is producing a little bit. The gears are turning here, but the big windfall of supply is Kazakhstan, and that's not happening. Just today, they updated with the trading update. And while their production did increase year over year for the first quarter by 7%, which is decent on a 100% basis, they noted that the new sulfuric acid plant that is just in the early stages of construction is not going to be producing sulfuric acid until 2027. When just a few months ago, they said that would be happening in 2026. We think 2027 itself is optimistic. And until this new plant that's producing 800,000 tons a year of sulfuric acid, theoretically, until that is actually producing that amount and that is being injected into the ground, they have to rely on domestic production from other sellers and imports of sulfuric acid. Both of those have been impacted. Both are extremely high price. So it's hard to believe that they'll be able to meaningfully increase production until this plant is up and running. And then you have that, 12-month delay. So we see 2028 as the absolute soonest that we'll see a big jump in production from Kazakhstan. And until then, maybe they'll be able to increase their production, 5% here and there, possible, but it's not going to be a windfall. And that's going to drastically impact these supply and demand models, because in the next 3 years, we've got demand growing substantially. That demand growth is not just from the growth of the nuclear reactor fleet globally and life extensions, but There's all of these other potential growth drivers that you just can't model out. SMR demand, financial demand, sovereign demand, inventory buildouts. All of these things are adding to the demand. You can't model them out, but it's not going to be zero. That's just on top of the demand of the fleet. So it's looking like we still have a few years here, at least, of kind of a dire supply situation, probably higher prices.
All right, yeah, well, thanks again, Justin. I know I had to basically steal a hole in your schedule to make this happen, so I'll let you go now, hopefully to return quickly, as I always do enjoy our conversations. And in the meantime, I'll be moving on to the CEO barbecue portion of today's New World Report. But of course, not before I've reminded you that here at Resource Talks, we're not like other channels in that we don't hate you. What that means specifically is that I would like you to be aware of the fact that although none of these companies that you're going to see on here have paid me for the production of their specific interviews, some of them will have active marketing campaigns across the internet and other places. This and other channels are and online pseudo celebrities like yours truly. We earn our money by offering services to companies. Okay, I offer a content creation service. Many would offer a hot air balloon service, etc. Point being, just be skeptical when consuming company related content out there. A lot of it is marketing. And although I try to do a decent amount of research and I don't share questions up front, no questions are off the table, and the companies get no say in what ends up in the final video, these things should still be looked at as advertisements, not as research. And least of all as recommendations. Okay, none of us know what we're doing. Pseudo online celebrities. That's a cool word, though. I'll keep using it. But none of us pseudo online celebrities know what we're doing. Otherwise, we wouldn't be making videos. We would be doing it. And in addition, these are forward-looking, general, and impersonal, private conversations about future events that may or may not take place, depending on many different factors, both within and outside of the company's control. So please be aware of that, and please talk to a professional investment advisor before burning yourself, and please do more research before taking any decisions by visiting setterplus.ca and the official company's websites. There are disclaimers on your screen right now. There was one a couple of seconds ago. Please go back, pause, read it. Read the one that's on your screen right now too. If you don't enjoy losing money, read them. Just be careful out there. With all that said, I will be moving on to one of the most highly requested interviews over the recent weeks, actually months maybe, for which I'll have to travel to the Athabasca Basin of northern Saskatchewan, where I'll be talking to Troy Bolsholy, the CEO of Atha Energy Corp. The company is listed as SASK, so that'd be SASK on the TSXV in Canada, where an average of about 680,000 shares trade each day, with a 52-week high of $1.67 and a 52-week low of 69 cents, with a market cap of about $188 million and about 273 million shares outstanding today. This is a 69-cent stock, so right at their 52-week low. Add to that 11 million warrants, 14 million options, and 4 million RSUs, and we get you to a little over 300 million shares, fully diluted shares, that is. Looking at the last financial statement, which is dated December 31 and covers the fiscal 2023 in Canadian dollars, the company had about $40 million in cash, or $40 million in current assets, actually, most of which, though, in cash, so $33.3 million to be specific in actual cash, as well as some GST receivables, prepaid expenses, and deferred costs on top of that. The balance sheet also shows me that there is no long-term debt, but there is a $2 million accrued liability and some flow-through premium that have to be brought into account here. That same statement tells me that Atha recorded about $15 million in operating expenses over the fiscal 2023, over half of which, almost $9 million to be specific, is share-based compensation, which means they will assume about a $6 million G&A cost for the year. So administration expenses. In terms of exploration expenses, geophysics represented the largest expense last year. So that was $7.7 million, and $2.2 million was spent on field work, with some more being spent on data review and an NI 43-101 technical report, resulting in about $10.3 million in total exploration expenses for the fiscal 2023. So this means that we're looking at an exploration to administration ratio of about 1.7. And so in total, G&A, including that share-based compensation, represented about 60% of the cost between the two. This is, of course, not including any M&A or claim fees, which for Atha came up to almost $50 million. So that'd be 50 last year, mostly represented by the big acquisition that happened there. So that'd be the acquisition of 92 Energy and Latitude Uranium, which hopefully we'll talk about later on, all of which was paid in shares, by the way, to the tune of about $40 million worth of shares. As I will keep reminding you, this is only a snapshot in time, though, and in this case specifically, it was at the end of last fiscal year, but this is a non-revenue generating company that is actively spending and raising money. So these numbers will vary depending on when you're watching this overview. And as it always is, it is your responsibility to go to the company's official website, as well as setterplus.ca to look at the numbers for yourself, just in case I'm getting something wrong or something like that. And as many keep pointing out in the comments, I do indeed enjoy looking at some of these numbers, although I may not always understand what I'm talking about, but I do enjoy looking at them. But that's not the only thing I'm looking at today. As I said earlier, I'll be traveling to the Athabasca Basin, but that wasn't 100% correct, because to see all of Atha's properties, I would actually have to travel to the Thelon Basin as well in northern Canada, and that would be on the border between the Northwestern Territories and Nunavut, as well as all the way to eastern Canada, all the way out to Newfoundland on the central mineral belt over there. Sounds like a lot of work, and it's a lot. It's a lot of ground. It's over 8 million acres, or over 32,000 square kilometers, which is larger than the size of the country I'm in right now, funnily enough. As you can imagine, those are a lot of properties to be looking into. So for your sake and mine, I'm not going to go over them one by one, but I'm trying to give you sort of my best effort at a 2 or 3 or 5 minute summary. There are 17, so 17 exploration projects that Atha holds within the Athabasca Basin itself. They're spread across 4 districts, basically. I more or less think of these projects as geophysical anomalies and nothing more, because they require drilling to prove to me that they are something more. For now, it is a could. But those are the early stage exploration projects in the basin. Atha also has a 10% carried interest in multiple claims that are held by NextGen and ISO Energy, that'd be on the western side of the basin, as well as a carried interest on some of Stallion's properties that are also across the basin. There's one property in particular interest of particular interest here to me, though, which came into Atha's portfolio after the 92 Energy acquisition late last year. And that is, of course, the Gemini project, which hosts part of the GMZ discovery. I say part because, as you well be aware, this discovery occurs on the project boundary, which is the boundary with baseload energy. And hopefully that is something we can get maybe a little bit spicy on later on in the conversation. Gemini is a shallow mineralized basement-hosted uranium discovery, similar to some of the other deposits on the eastern side of the basin. Think, for example, the Rabbit Lake mine, which is owned by Cameco. And at JMZ, grades range between 0.6% of U3O8 and 1.5%, with a few higher grade narrow intercepts here and there as well, all of which asking for more exploration, which is also happening in 2024. Again, point of discussion for later on. Then there's Nunavut, the Thelon Basin, highly anticipated, highly talked about potential, and emphasis on the potential new uranium hub in Canada. And Atha owns almost 3 million acres of mineral claims across 5 regions up there, making it the largest landholder that far up north. But most of those are also early stage, sort of greenfield, unexplored lands. So for now, that's what they remain, and hopefully again we'll hear more about them later on. And I'd say most of them, and not all of them, all of those being early stage, because Angulac is the project that Atha is seems to be putting the most attention on right now. Well, obviously that's also in Nunavut, part of the acres that I just told you about. And that's because this is where the LAC 50 uranium deposit is. This is Atha's most advanced property, which hosts 43.4 million pounds of yellow goodness at an average grade of 0.69% of U3O8. But of course, Atha didn't buy this project just for what it is today. They bought it because they believe there is upside by drill bit in both expanding the known mineralization and potentially finding additional pods of mineralization. Again, something we're going to get into later on. And then lastly, there is Newfoundland, where Atha holds the CMB project, which is also an advanced stage project. There is a historic, emphasis on the historic, but there's a historic resource on it, 14.5 million pounds of U3O8. And this is also adjacent to Paladin's Michelin deposit, which is almost 10 times the size of CMB at close to 130 million pounds. So again, I'm assuming Atha didn't buy it for the 14.5 million pounds. They bought it for the potential upside, which is something we can talk. Actually, this might be a good point for me to start shutting up, Troy, and talk about some of these stuff, because when you bought some of these assets, when you bought 92 Energy and Latitude, you probably expected it to be accretive for the share price. And it looked like it was going to be, with the price going up some 40% over about a month after the announcement, well into the beginning of this year. But now you're down about 30% since that announcement, down more, almost 50% since the beginning of the year, in what seems to be sort of one consistent downtrend. How come? What's happening? Why is the share price falling?
Well, I think there's a couple things, okay? And one of them is just from a market-related standpoint, and you look at the uranium sector, especially in the smaller cap companies, and there's been a rebalancing, there's been a bit of a pullback, which, you know, in a bull run, which I think we can all agree we're in the uranium market, at times that's healthy, right? And so there's been a bit of a pullback in the market for which we've been subject to, and then also in turn. We've been busy closing 2 transactions, and as the acquirer, it is, you know, generally anticipated that there is a bit of softness on the close, and that's exactly what we're seeing right now. We had a 2-stage closure because it was a 3-stage transaction, and so we closed Latitude Uranium in early March, you know, have solidified, in our view, that shareholder base into Atha shareholder base. And then with 92 Energy closed in early April, only about 2 weeks ago. We just came through a process where the sales cell facility, which was ineligible participants from the 92 Energy side, had an opportunity to pool stock within a fund that was then managed out by Canaccord. That has completed. And so now we're at a stage where we're comfortable with how things, you know, we track the market very closely, obviously. We're very comfortable with how things have consolidated up into a number of hands outside of on the closing of these transactions. And we actually feel like we're very, very well positioned now, moving into one of the largest exploration programs, if not the largest exploration program in the uranium sector this year. You know, we've really spent the last year through listing in April of 2023, through the work that we did in the course of 2023, and then obviously with the acquisitions of LUR and 92 Energy, really setting the stage for what's about to happen and what we're right at the precipice of kicking off right now.
Do you know who Canaccord ended up placing those shares with that came from the Aussies?
Yeah, they placed those shares into the market, you know, through the share sell facility. There was, you know, there was some blocks that moved, but you know, no, you know, beyond that, we understand generally where they ended up.
Okay, so there's no one major party or someone else coming in
No,
buying those shares.
yeah, and for clarification, it was not a huge volume of shares. It was the equivalent of 1.64 million shares of Atha Energy, and so over the course of a period of about 10 days, that was cleaned up.
But 92 Energy holders ended up getting, what, 65 million shares or something along those lines.
Yeah, that's right. So that was just ineligible holders. The rest of the shares have been transferred over to 92 Energy shareholders, and you know, the blocks of shares there. The biggest blocks held by 92 Energy shareholders would have been ISO Energy. ISO Energy, as a function of 92, held just under 10%. And you know, we obviously know where that block went. And in addition to holding the shares, ISO also participated in the concurrent financing that we did. So they took the senior offering down, which was done at $1, and participated to the tune of $2 million. From an institutional side, there's also Sachem Cove, who held about 5%, just under 5% of 92 Energy. Again, in the transaction concurrent financing, they had the opportunity to participate as well. And so the bigger blocks of 92 have come across very supportive of what we're doing, and of what we're building, and what our view and objective is moving forward.
Okay, and then so the Aussie institutional ownership of 92, do you get to talk to these guys as well and see if they were willing to hold some Canadian stock, or like how did that go down?
Yeah, so institutionally, there's a couple institutions that were participating in 92 Energy. We got across that. They're supportive of what we're doing, and I think participated in that. With the spread as this thing was closing. Okay, it probably increased their position, and then how this, how 92E traded during the transition period. We believe that the majority of people who either were not interested in holding foreign paper or foreign stock, or didn't identify strongly with the deal, had a chance to move out. And so we aren't seeing a lot of paper come out on the end of this transaction, and from here on out, we don't anticipate seeing that.
Okay. Were insiders also participating in that concurrent financing in any meaningful way?
So we've had continuous insider buying on the market. With that transaction that we did, it was with the concurrent financing that we did, pardon me, it was taken by there was two groups that took the senior offering. That was Atha Energy and Mega Uranium. And then there was only three additional names that took the remainder of it, which was $19.5 million in flow through. That was only spread across three names. And so the opportunity for insiders to participate was pretty thin, but we do have very strong insider ownership. Some of the founders of the company, two guys that vended in the land package, etc., prior to the transaction, held over 30% of the company. Now you carry that math through, and it's just under 14%, I guess, on a basis where we're at right now. But our total insider ownership and institutional ownership is very strong, very strongly held in those categories.
What would that be specifically after the close? How much insider ownership do you think there is?
Yeah, insider ownership after would still be over 20%.
Okay.
Yeah.
Let me tell you where I'm coming from with these questions, by the way, just to explain myself, because I know I sound annoying. I'm just thinking, how many people own this stock now? This 301 million fully diluted shares. So I'm thinking, is
Yeah.
this a shareholder registry of like 10,000 people? Like, how many people are we really talking about here?
Yeah, it wouldn't be 10,000. It would be, just over four, I believe. I think we printed just over 2,200 DRS statements in the 92E transaction, and then you build on what we had before. But prior to Atha entering into these transactions, we were very tightly held. We were very tightly held, and continue to be tightly held. And even through this, we look at, we track share movements very closely. Okay, and as of about a week ago, we were looking at about 90% of the stock held in about 29 names.
Okay, yeah, good. Well, it's a new company too. I mean, you
Yeah.
just got, wouldn't you start this in 2021, I believe, right?
Listed April 11th of 2023.
Yeah, but you started, I mean, the company was started in 2021
Yeah,
as a
that's right.
private co. Okay.
Yeah,
Do you have
as a
do you
private.
know what your average cost of capital is for your shares?
For our shares, yeah, I'll give you a breakdown of that. Okay, I'll give you a full rundown. Pre-listing did around a $1.2 million raise at 10 cents. Then did 7.2 at 50 cents, and then did 33.3 at $1.
Okay, that's you personally? Like
That's
insiders?
that's Atha. And so
Okay.
the first round, the 10-cent round, was insiders, typical insider round, friends and family. Same with the 7.4 or 7.2, pardon me. And then the $33 million dollar round was done very tightly across, I believe it was 10 names, 8 institutions, and 2 family offices.
Okay, good. Yeah. Well, thanks for that rundown.
Yeah.
You're so young guy. How old are you, if you don't mind me asking?
I just turned 42.
Okay, I would have thought you were actually in your 30s. But
Yeah.
good. Obviously a young guy. Especially for our industry, you'd probably be one of the youngest in most rooms that you get in. And But it's good to know where all this is coming from. This is not coming from the point of, oh, I want you to own millions of dollars of this company, because not everyone has the same abilities, especially younger people still have to build up name and so on and so forth. But I like that rundown, and I like that percentages. That's where I'm coming from. Let's let the annoying questions maybe a little bit to the backside here and talk about some of the stuff that you did. Well, this is actually also going to be an annoying question. When you bought 92 Energy, you didn't buy or you didn't pick up baseload with that as well, despite the deposit being on that boundary. Why? How come?
Yeah, we have I'll maybe step back a bit and give you a sense of what our strategy was and how we came to the acquisitions, if you don't mind. And then I'll circle back into the baseload question and the geology relative to Gemini baseload. But Atha came to market last year with a specific mandate. Okay, we started trading on April 11th of 2023 with a growth strategy in the uranium space. Okay, it was based off a foundation of a very strong capital markets team that had raised to date over $40 million into the deal to support the largest land position, greenfields land position and exploration position in the Athabasca Basin with over 3.4 million acres. Now, growth comes in our view in really three ways within Atha. It comes through investing in our asset base that we have, and that's our greenfield exploration package, which we did. It comes through, as you mentioned, exposure to NextGen Energy through a carried interest in their exploration programs. But it also comes through merger and acquisition based off of how the company was designed and built. Now, when looking at the acquisition strategy, it was squarely focused on maturing our asset base. Okay, 3.4 million acres, as you said, predominantly greenfields exploration, which I like because it has high torque, but the ability then to mature ourselves and mature our asset base. And so we set to work looking at a number of companies, and 92 Energy came to the forefront, and also Latitude. And I'll get into Latitude later, but the reason 92 Energy came to the forefront is obviously, as you had mentioned, the Gemini project and the GMZ zone. Now, when we're evaluating that property, one of the things that struck me when I had a chance to get to site, walk across the core, and understand the controls on mineralization at GMZ, were the similarities between Gemini and the Rabbit Lake corridor. Okay, both from a structure, an alteration, style of mineralization, controls on mineralization, etc. And based off of the understanding of where GMZ sits in that stratigraphy, sits in the Hidden Bay assemblage, which is higher up in the Wollaston domain. Now, you go into deeper water metasediments, which is to the north, and then apply the analogy of the Rabbit Lake trend, where GMZ would be equivalent to, say, the Hidden Bay packages, Raven Horseshoe, which are two lower grade deposits along that Rabbit Lake trend. And then you follow that to the north into deeper water metasediments. And that's where you get, that's where the higher grade deposits within that trend come from. And so bringing this back to GMZ, bringing this back to baseload and the whole corridor, we believe that the potential for expansion exists both in the GMZ zone itself, but the exploration potential that we're looking at and that we're highly focused on goes to the north along that trend.
So you think it's the exploration potential would be closed off to the south of it?
Well, not necessarily. Hey, I don't want to say closed off. I know baseload is doing work in that area, and they're going to continue to do good work on the south side of the border. What we're looking at is based off of the analog that I believe is very close here between the GMZ corridor and the Rabbit Lake trend. And I am interested personally in seeing the potential as we go into the deeper water sediments, as we go into more into the basal Wollaston domain metasedimentary rocks going back to the north. And so, that's my view, and that's where I feel the potential is. It won't be the only view out there, and I'm sure baseload has their own view on the potential going back to the south as well.
Going to the north and deeper into the sediments, that means that you're going to be drilling through more sandstone cover to hit that potential mineralization, right?
Yeah, there as you go, because obviously GMZ and by association, Accio are right at the edge of the basin, right at the eastern edge of the basin. So yeah, certainly as we go further into the basin, you do have an increased depth of cover of the sandstone basin, of the Athabasca Basin sandstone cover. However, we're not talking about hundreds of meters of thickness. We're talking, it goes from being very shallow to, I think in the range of 250 to 300 meters at the northern edge of that 11-kilometer trend.
So yeah, well, because what you have basically at the border is like 20, 25 meters of sandstone cover, like virtually no sandstone cover.
Exactly, virtually overburden, right?
Okay.
Overburden thicknesses of sandstone, very shallow cover. And as you go further north along that structural trend, obviously you get deeper into the basin, and that sandstone cover increases.
So can I make your exploration program more expensive on a per meter basis, or more challenging, more risky?
No, no. One thing that we do in the basin is we explore undercover. That is, that's been, you look on the eastern edge of the Athabasca Basin, between Key Lake and Rabbit Lake, everything in between, all under, various depths of sandstone cover, ranging from next to very thin to say 600, 650 meters, 700 meters of cover. You just have to be cognizant of that, and you have to deploy the tools that are known to be successful. And when I say tools, the geophysical surveys, etc., that allow you to build up stacked anomalies and priority targets when you're dealing with exploration undercover.
Looking into the future, the potential for this would be to become sort of the next open pit uranium mine on that side of the basin, go back to basics, if we will, because the Athabasca Basin was built on open pit uranium mining. It would almost not, no, not almost, it would just not really make sense to me if these things would go into production separately. So how do you see that? Do you think these two, like, so Accio and GMZ, do you think they eventually go forward together?
Well, I think that what we're focused on right now, over the course of this summer program, okay, is two things. We're focused on expanding mineralization at GMZ, and we're focused on additional discoveries along that GMZ corridor going back to the north. And the reason I say that is because both on the Accio side and on the 92 Energy side, which is now the Atha side, I would consider the exploration process very immature in this area still. So to say that the two would have to go together without having a full understanding of the mineralized potential of this corridor and of this area, I think would be premature. Certainly when you look at assets that are close together, you start to think about synergies, and so we'd never discount that. But we're focused on right now is understanding the true potential within this corridor, which we believe has only had the surface scratched. You look at exploration along the GMZ corridor, and it's limited within a few 100-meter range, really, with any material exploration within the GMZ discovery. And so our focus is understanding and uncovering the true potential within this corridor this year.
I'm trying to imagine the process of when you bought it, when the idea first crossed your desk. You probably looked at it. That's how I imagine it. Correct me if I'm wrong, of course. But you probably looked at it and thought about it, sort of like, how big would this thing have to get for us to make sense to buy it now at this valuation? That's how I imagine the thoughts were going. So what was that number like? How big do you think it could get? How big do you think it has to get for the investment here to pay off?
Well, let's go back to an analog again. Okay, the geology is very analogous to the Rabbit Lake corridor and the Rabbit Lake trend. There are very few of these basement-hosted uranium systems in the Athabasca Basin, and the commonality amongst them is that typically you have more than one and multiple uranium occurrences along a favorable structural trend or a fertile structural trend. And you look at Rabbit Lake. Rabbit Lake has produced over 200 million pounds of uranium along that corridor over the course of the lifespan of the Rabbit Lake property, and it's not done yet. There's still over 70 million pounds of uranium resources at Eagle Point. So when you say what do we think the scale potential is along the GMZ corridor, given the stage and scale of exploration, the amount of open ground, and the analogy back to Rabbit Lake, I would point, on the upper bounds, I would say that's what we're thinking. We're thinking about exploration scale along that corridor, analogous to the Rabbit Lake trend. Now, you can't, there's a lot of work to do there. And so the reason we acquired this property is as much for the mineralization in the ground right now as it is the asymmetry that we see in the upside potential of this property. And when you think about uranium exploration, you mentioned on the onset that there's greenfields exploration properties in which which you build up exploration targets on through geophysics, etc. And then you have more demonstrated, more high probability targets and areas that have already had uranium mineralization identified and defined within them. And this is in the latter. Right? Like this is a project that has mineralization identified based off of a knowledge of the basin, based off what we understand are the structural controls and the overall controls on uranium in the Athabasca Basin. We bought this project for the asymmetry that we see there, asymmetry to the upside along this corridor.
So it's interesting to me that we don't quite know how mineralization even got there in the first place. If this was a porphyry, we'd know. With this uranium, we don't know. But you do have a proof that the structural controls further up north are resulting in the right alteration system that's causing mineralization. So is the thesis based mostly on that? How are you picking your next targets when you start looking up further north? Are you doing a geophysics geochem approach, or how are you picking targets?
Yeah, so just back to your original point there. We don't definitively know how uranium mineralization occurs. I'm a geologist by background. There's a couple different schools of thought on that, right? And competing ideas. However, what we do know is we do know the signatures of these systems. Okay, and we know that you're looking for hydrothermal alteration systems that have geochemical signatures associated with them. We know that they are structurally controlled and that mineralization is localized within structural traps. And so what you do then is you design a geophysical program that is looking for proxies for uranium mineralization. The primary tools that we use, we look for mag lows. So first of all, you look at magnetics, you look for mag lows. Mag lows are associated with the right type of basement rocks, the right type of metasedimentary basement rocks. Then you look for EM conductors. EM conductors indicative of the structural setting and call it ground preparation and backdrop and architecture that you need to host a deposit. And then you're looking for a proxy for alteration, and you're looking for alteration. And the tools that we've just deployed at GMZ looking for that alteration signature going back to the north would be one, a ground gravity survey. Obviously, gravity surveys, you look at a gravity low as potentially representative of a hydrothermal lower density clay alteration system. And then we've just deployed and are in the process of acquiring data through an ANT or ambient noise tomography survey, and that's another survey that has had recent success in identifying alteration systems within the Athabasca Basin, and we're in the process of collecting that data. So the reality is, what you're ultimately looking for, in my mind, is a stacked anomaly. Okay, you're not looking for a single anomaly across a single survey. You're looking for where you can find a magnetic low coincident with EM conductors overlaid by a gravity low, overlaid by, in the case of ANT, a low velocity. Again, it's a velocity survey, so a low velocity signature, which is then a proxy for alteration.
Right. I'm very curious to see how ANT develops over time, because it's a relatively new technology.
Yep.
I don't even know the cost of it. I've tried asking a couple of people in interviews. Nobody wants to tell me because it's a private thing, apparently. If you want to tell me, do. But I'm thinking about mineralogy, primary mineralogy. When you go deeper into the basin, does that stay the same for you to be still keep working with that gravity low anomalies, looking for those gravity low anomalies as far as I understand, not a geologist, but as far as I understand, the primary mineralogy would also have to check out for that approach to keep working. And is that the case for you as you go deeper into the basin? Is it basically the same rocks?
Yeah, deeper into the basin, you're looking for, you're looking for contrast, right? And when you have a hydrothermal alteration system, you convert your primary mineralogy into clay mineralogy, and that is even more pronounced typically in the basement rocks. Okay.
Okay.
So you have feldspar conversion, you have feldspar destruction that's going to clay mineralization, et cetera. And it's that density contrast and that therefore that, in our view, that velocity contrast with A&T that is the signature that you're looking for. And so, both gravity and in our view, probably in a more higher resolution, with a higher resolution, we'll be able to image that with A&T based off of the data that I've seen to date.
So it's essentially easier to pick targets the deeper you go into the basin because of how
That's
the
right.
rocks change. Okay.
Yeah.
Well,
Well,
what else?
and also because the sandstone in many instances preserves that signature. Okay, and so the Athabasca sandstone is a very homogeneous unit of rock, and it preserves a signal very well. And so you can think of it in two ways. You either think of it as an encumbrance to exploration, or if you think about it appropriately, you can use it as an exploration tool because it does preserve that signature.
Well, that's exactly what I was going to ask. Well, what's the
Yeah.
catch? Because I mean, if it's better, there's typically a cost to it. Not necessarily a financial cost, but there could be a catch. Do you think metallurgy would be more challenging the deeper you go? And are you doing any met work this year to figure that out?
No, generally across the basin, you get uraninite pitchblende uranium
Mm.
mineralization. It's fairly consistent there. I am not aware of a project in the Athabasca Basin that has challenging uranium metallurgy. When I say that, obviously there's variations within that, right? You get some deposits that are essentially polymetallic deposits, where you think about the Key Lake deposits, or you think about Collins Bay A, B, C, D zone, etc. And you do have an association of some sulfide mineralization that is interlayered with uranium mineralization, but the uranium itself, it's generally uraninite, pitchblende, coffinite.
Right.
Yeah.
Are you doing any met work to know that for sure this year? Is that too early for you?
Yeah, we won't be doing any detailed metallurgical work. Visible identification of this mineralization from I'll just give you a bit of a background of maybe myself and the team, for those that I've spent the better part of 2 decades in the uranium space. Came up through Cameco Corporation as an exploration geologist, moved over to operations. I was the chief geologist at Eagle Point, which was the underground uranium mine feeding the Rabbit Lake Mill. From there, had the opportunity to join NextGen. I was the vice president of project development, operations, exploration, and community there for a number of years. And so I've spent a lot of time looking at a lot of drill core in the uranium space. Confident in the ability to identify these mineralized systems, and from what I've seen at GMZ, standard uranium mineralization in the Athabasca Basin.
Right. Yeah, that makes sense. And also visual, like you basically see it, it's uraninite.
Yeah. Yeah, and you have geochemical assays, et cetera. And so,
Right.
the ratios would be off and the mineralization would be off if it was a different form of uranium mineralization.
Good. I actually did not intend on starting there, but I'm very interested as to what happens with the more shallow deposit in the basin. I sometimes I'm not always as happy when I see very high grade headline grades, and then everybody is sort of happy about it. But then I look at it and it's like 950 meters deep, and I even start thinking about what is this thing really going to amount to eventually. Um, and I also have, this might be a good segue actually, but I also kind of had the same reaction to your Nunavut properties, Angulac. Because when I looked
Mhm.
at it on the map, it's way up north. And the first
Yep.
reaction that I had is like, what are these guys even doing messing that far up north? Like, do the people even want work to be done there? Do they even want to have a mine there? Where's this thing going? So maybe we can segue into talking about Angulac here, with you just giving me sort of a background on yeah, just historically community
Sure.
relations and stuff like that.
Yeah, let's start off there. So Nunavut as a province is as a territory, pardon me, Nunavut's a territory within Canada, very supportive of mining. I think currently mining represents about 45% of the GDP in Nunavut. If we put this into the context of uranium, okay, and of the uranium market, one of the big developments in between the last two cycles, within the last, I would say within the downturn of the uranium cycle, is specific to where we're at, and that's the Baker Lake region. Agnico Eagle just built a mine. They built a gold mine in the area that some of your viewers would be familiar with. That mine, I think is projected to have a mine life that extends to the latter part of this decade, but not beyond. And so, very recently, when I say recently, I mean last week, we were in Nunavut. Our team was in Nunavut, talking with the Minister of Mines and at a conference, and having boots on the ground in the territory. And they were extremely and are extremely supportive of mining writ large. In particular, I think turning now the focus to the uranium potential within their backyard and within their territory. You think about the nuclear industry as it relates to northern Saskatchewan, or pardon me, northern Canada. And one of the big draws and benefits is small modular reactor technology. You have isolated communities across the territories, that being the Northwest Territories and Nunavut. And these communities are isolated communities. Power is generated via diesel power or other sources of power that has supply chain issues, et cetera. And so the interest in SMRs and therefore the nuclear space is really high. And so from a community perspective, the indications that we have had in doing our due diligence and understanding the jurisdiction, and then the recent interactions and recent experiences that Atha has had, is that Nunavut is a jurisdiction that is highly supportive of mining in general, and understands the potential associated with uranium exploration and development as well.
So you actually went there, spoke to the communities. How many First Nations? Because it's a lot of ground, so you're probably dealing with a lot of them.
Primary community is out of Baker Lake.
Okay.
Baker Lake would be the central community that we're engaging with as it relates to both Angulac and the Thelema Basin exploration projects.
Okay. And they're just happy with you. You don't, well, you're mostly doing exploration, so you don't need any special permits right now, but you basically just need their blessing.
That's right. There obviously there are call them small P permits, right? There are permits that are required for exploration, of course, and we have those in hand at Angulac. We're ready to go. We've moved in drills. We've opened up camp, and we're ready to go at Angulac. Everything's in hand there.
Right. The camp that you built, by the way, now we can talk about the exploration program there. What kind of camp is that? It's sort of a tent-based camp? Is it cement-based? What
No,
is it?
it's a remote camp like most are. It's a tent camp, so to speak. But we didn't build that ourselves. Obviously, that was there in place when Latitude was doing exploration, and even prior to that, when Valour and others were doing exploration at Angulac.
So you haven't had any, you haven't had a huge out-of-pocket cost for camping this year.
No. That was one of the big benefits there, is that there's an existing camp on site. It's just a matter of getting in, opening it up, and getting ready to go.
Well, but and also you kind of said it with a smile there, which I appreciate. But as you would know, some people actually do build like permanent camps to do a small exploration program and then spend a bunch of money on it. I think that's something that not many people necessarily think about, but I noticed it in a news release that someone was putting in a sort of a base, cement base or something along those lines. I was like, oh, this is a little overboard. Anyways, so you're drilling this year, 10,000 meters?
Yeah, the base case program at Angulac is going to be 10,000 meters, and then have the ability to continue to execute work from there, given the right success factors in the early stage. And the objective of the drilling in 2024 is two-pronged. Okay, it's one focused on the expansion of the Lac 50 deposit. And you mentioned it on the onset, but there's a historic resource there of 43.3 million pounds at 0.69% U3O8. And when I say historic resource, the majority of the work was done from 2011 to 2013. So it's modern data, modern drilling, etc. We have a high degree of confidence. I've done a bunch of resource work in my background. I've, been through the data in detail. High degree of confidence in the actual resource that's been published. And so our program this summer is focused on expanding that deposit. Okay, it's open on strike. It's a structurally controlled system. It's open in the hanging wall. It's open in the footwall, and in particular, it's open at depth. And current mineralization only goes down to about 350 meters. And you look at the controls on mineralization here. This is a basement-hosted uranium system again. Structural controls on mineralization and the ability to extend mineralization to depth here, I think is really strong. And, from my experience, you look at when you're evaluating projects, in particular, evaluating resources, it's important, obviously, to get a handle on the geology and understand the geologic controls and the potential associated with those controls. But it's also important to look at the past performance of a project. Okay. And this is a project that went from a maiden resource of 14 million pounds in 1 year of drilling, went to 27 million pounds. And in another year of drilling went to 43.3 million pounds. Okay. So it's still in the very steep part of that resource growth curve. And that's important. You overlay that with the targets that we have this year. We intend to materially expand the footprint of mineralization at LAC 50. But just for clarification, we will not be delineating our way out. So we won't be expanding at 15-meter centers, which puts yourself in a very high part of the development cost curve. We'll be expanding with widely spaced drilling, looking to find the edges, find the extents of this mineralizing system. And then once we've found those extents, then we'll come back and infill subsequent to that. Making sure that we aren't putting the cart before the horse in terms of our expenditure profile at Angulac. But then in addition to that, we're going to be focused on discovery outside of the deposit itself. There's already 4 discoveries outside of LAC 50 that have been made, and we think about this from a property perspective then. And what that demonstrates to us is that there's a high metal endowment on this project. That high metal endowment is something that we obviously like. Again, as with 92 Energy and that acquisition, we weren't only looking for the pounds that were in the ground, but we were very focused on what the scalable upside potential on this project is. And so that's what we intend to test this summer.
I want to talk about exactly how you're going to be expanding that here in a second, but you mentioned something important about the growth curve in the resource. 43.3 million pounds. How many meters of drilling did that take?
It was around 100. I can get it for you here exactly. And just bear with me for a second. It was around 115,000.
Okay, 115.
Yeah.
How do you think that efficiency is going to change both from a tonnage and grade perspective now as you're going to be drilling this? I mean, can you keep I don't have a calculator around me, but can you keep discovering pounds at the same tempo? Do you think it's going to be quicker? And also in terms of grade, now knowing and understanding the system better than the first guys did, do you think you're going to be able to zone in on higher grades quicker than people were before you?
Yes, is a short question to it, or answer to it. But the reason for that is we have the good fortune now of having 115,000 meters of drilling to be able to model in detail the structure, the alteration, the lithology, the mineralization, define controls on mineralization, then target those appropriately. And so we would anticipate, being able to have change that profile during the course of this program. But at the same time, we also are not in a delineation phase here. You look at the work that had been done over the years, and it was delineation. We're looking for the extents of this system, and then we'll come back and delineate subsequently. Okay,
right.
So it's making sure that we want to get to what we would view as a critical threshold on this property in terms of the scope and scale of pounds that exist here, and then be able to work that back and drill for confidence, drill for certainty, drill for classification once we've identified the extents of the mineralization on this property.
So you're not necessarily working with a fixed amount where you say you want to have 70 million pounds and then I'm doing a PEA. You're just saying I'm gonna keep stepping out 100-meter step outs or whatever, and then I'm gonna stop and go back and do infill the moment I drill an empty hole, basically.
Well, yeah, I wouldn't say one empty hole. I would say,
Yeah, sure. Yeah, yeah.
but where we have confidence that we found the edge of the system, then we'll come back and we'll delineate. But the strength of Atha is that we have a strong balance sheet. We have a technical team that can operate and execute in-house, and so the ability to continue to execute a program beyond that 10,000 meters is very real for us, and continue to accelerate the project. I look at the mineralized potential on this property, and the analog that I think about directly is Orano's Kigavik deposit. Or, well, when I say Kigavik deposit, it's not a single deposit. It's a series of deposits on the Kigavik property, and Kigavik hosts about 126 million pounds of uranium mineralization that is localized in, I think, 5 or 6 different deposits on that property. And I look at Angulac and I look at the potential that we see in terms of the geologic indicators and quite frankly just the work that's been done already and the discoveries that have been made, and that scale of opportunity is something that's squarely in our mind on this property. It's like it's still, as happens with these things, right? You get into a delineation phase, and all of the time, effort, and attention goes into infill drilling and delineation, within a known footprint. And so we intend to change that this year.
Yeah. Yeah. Seems like that's also just ways away eventually. It doesn't, well, obviously not targeting PEA this year, I don't assume.
No.
But I also don't assume it's going to be 2025. Again, you just let the deposit dictate the tempo of exploration here. That's what I'm getting out of it.
Yeah.
When you're expanding that though, how much of the drilling is going to be focused on expanding in a depth versus expanding in a long strike?
Yeah. So maybe I'll give you a breakdown first on the amount that's looking at expanding LAC 50 as opposed to additional discovery. Okay. And that'll be about 80-20. Sure. So about 20% of our effort will be spent, drilling costs, et cetera, will be spent on exploration drilling outside of the footprint of the LAC 50 zone. And then, on a meterage breakdown, in terms of a breakdown of holes, I would say it's about, it's almost equally weighted between extending on strike, testing hanging wall and footwall structures, a number of which already have mineralization identified within them, and then expanding at depth. And there's almost an equal weighting there. And it's because of the nature of this deposit, it's not going to be one area that we're going to identify and focus on expanding at strike. Like there's opportunities in multiple areas here to just take this deposit and just expand it kind of in the 3D context and sense. So expand on strike, expand across width in terms of the stack structures, and then also expand at depth.
Okay. That's something we can talk a lot about. I know that our time is almost up here, so I just want to get maybe a couple of quick questions in, maybe a twofold question. How much is all that going to cost? The 10,000 meters, camp, food, getting the toilets out of Nunavut and all that stuff. And how much money are going to be left after that drilling, and where's that money going to go in?
Yeah, we're looking at an overall exploration budget for Atha across all of our assets this year of about $30 million. Okay. 40% of that is going to be at Angulac, which includes geophysics, includes mapping, etc. 30% of that, around 30% of that is going to be GMZ, the work that we talked about on the onset. The remainder is going to be investing in our extremely large pipeline of exploration properties across the Athabasca Basin and the Thelon Basin, really backfilling a pipeline of high value exploration targets. And we haven't really touched on the broader scale exploration, but I'll just give you our concept and our approach off the bat here. We have the largest land position in the Athabasca Basin. We have the largest land position in the Thelon Basin. We're taking a systematic approach to exploration, which means that we're exploring across the majority of those projects. We're picking out the highest probability, highest priority targets amongst the best uranium jurisdiction in the world, and then are going to invest in those ourselves. But in addition to that, you may have seen we've had a couple farm out agreements where we're looking at maximizing the amount of exploration expenditure in that jurisdiction, providing us the most amount of exposure to discovery. And so overall, that's our strategy.
Good. How much money are you budgeting for G&A this year? Or, I mean, everything, marketing, travel, all that.
Yeah, marketing, travel, G&A. So, G&A will be about 2.5. Marketing is a flex budget. We intend to, call it between $1.5 million and $3 million, which again is less than 10% of around 10% of our exploration expenditure. And overall, what we're projecting with our budgets is, we'll have in the range of $20 million left at the year end, and that's because of the dollars coming into the deal through 92 Energy, through Latitude Uranium. And what we also have is a series of refundable deferral and deficiency deposits that were made to the Saskatchewan government in 2023 that we expect to come back to us based off the work that we've done.
Good. Well, you have a lot going on. Again, a lot of projects, a lot of land to look into, stuff like that. It seems like you're going to have a lot of news too. So I hope we can do this again. There's a bunch of other stuff that I didn't ask you, but I know you have to run here, Troy. Thank you so much for doing this. I'm going to move on to yet another request from viewers, actually. I will be staying in Canada, just moving a little bit to the east. And so into the James Bay area of Quebec, where I'll be talking to Vincent Metcalf, the CEO of Comet Lithium Corp. Companies listed as CLIC, so that'd be CLCI on the TSXV in Canada, where an average of about 18,000 shares trade each day with a 52-week high of about 75 cents and a 52-week low of 30 cents. With a market cap of about $7.5 million and about 25 million shares outstanding. Today, this is a 30-cent stock. Adding 5 million warrants and 1.5 million options, as well as some RSUs and some DSUs, leaves us with about 31.6 million fully diluted shares. Management owns about 3%. High net worth individuals are recorded at about 26%, and a couple of institutions own another 15% of the company. Looking at the last financial statement, which is dated December 31 and covers the fiscal 2023 in Canadian dollars, although I will make a note here that that was a completely different company, which is going to make sense here in a second. But just to give you an idea of what that looked like back in 2023, the company had about $3 million in current assets, most of which, $2.4 million of which, to be specific, in actual cash and trusts, as well as some tax receivables and prepaid expenses on top of that. The balance sheet shows me that there was no long-term debt and that there was about $500,000 in account payables. Same statement also shows me that Comet recorded about $4 million in operating expenses over the fiscal 2023 in total. There's about $900,000 of which was spent on what I call administrative expenses. So that'd be professional fees, marketing, offices, and so on and so forth. While there was no exploration expense, and about $2.4 million was recorded as impairment of mining properties and impairment on deferred exploration. And there was about $700,000 recorded as share-based compensation. There was about $1.6 million that was added to the deferred exploration expenses here in 2023, which means that if you wanted to make an exploration to administration ratio, that'd be about 1.7, or it would mean that exploration represented about 40% of that total $4 million spent last year. In total, the company closed financings for again, in total, a little over $4 million over that same period, same fiscal year, with one flow-through financing to the tune of $1.2 million at 85 cents. $1.3 million was closed at 50 cents. That was non-flow-through, and $1.5 million, also non-flow-through, was raised at 75 cents with a $1 2-year full warrant. Of course, this is only a snapshot in time, as I said, in this case specifically at the end of last year, but this is a non-revenue generating company. They're actively spending money on researching their properties. So the numbers are going to vary, especially given the change of management and all the other things that we'll talk about here in a second. So just depending on when you're watching this, you want to go to their official website as well as setterplus.ca. Look at the number yourself, just in case I'm getting something wrong, but also just because these things change. We all know that there's nothing more fun than numbers and balance sheets, but geology and lithium comes close. And as I mentioned earlier, we're in the James Bay area of Quebec. Yes, the ever famous Winsome Resources and PMET both have their discoveries not too far away from here. Winsome obviously way closer, and a couple of other companies that have been on the channel over the last couple of months do as well. For Comet, the flagship asset would be called Liberty, and it's actually contiguous to Adena, to the Adena lithium deposit. That's Winsome Resources, with Liberty, of course, being much earlier stage, but it's on the same sort of Trieste greenstone belt. Comet has completed an initial exploration program here, though no drilling yet, as far as I understand it, on what is a 20 square kilometer land package, taking home over 500 rock and soil samples, as well as multiple pegmatite outcrops and glacial boulders have been found in that Walking the Bush program, basically, all of which was then used to come up with drill targets in addition to geophysics and geochemical anomalies being used for that as well as actually verifies new AI tool, which I'm hoping to learn more about later on in the conversation. Those drill targets are expected to be drilled this spring and summer, or are being expected to be explored more this spring and summer, with drilling potentially in the summer and fall, with three dual teams basically starting the geological, geophysical, and geochemical work on it, with the goal, of course, being finding pegmatites, and after which, depending on financing conditions, of course, drill rigs will be deployed for, again, a summer or fall drill program to see if those potentially, if those pegmatites are mineralized. Aside from Liberty, and actually way to the south from Liberty, about 130 kilometers away from the town of Chibougamau, still in Quebec, Comet has also controls 100% of the Troleus East project, which is a project that has been previously explored, but mostly for gold and copper, given its proximity to a feasibility stage gold project that is owned by Troleus Gold Corp, which is a gold development company that might soon also be coming on the barbecue as well. Comet actually walked the ground in 2020 when it was called Xterra Corp, collecting surface samples that were intended to show the land's potential for gold and silver. But instead of showing potential for that, out of the 475 samples they collected, 95 contained anomalous lithium. Some of them even contained elements like scandium, tin, and tungsten, suggesting that a large magmatic event took place over there, which helped the company come up with 5 separate lithium target areas. No drilling here yet, though, so hopefully that's something else I can get an update later on in the conversation. And there are actually a few other projects that the company has an interest in, including a few more in Quebec and one even in New Brunswick. But since they're not visible on the website, I'll assume they're not going to be as active on them. And so I'm going to skip over them for now. But again, I will be asking for an update later on. And clearly, this should be enough of having to listen to my voice at least for a couple of more minutes. And Vincent, I want to start off with maybe start off with you personally, actually, to better understand what you're even doing here, because you went from a success in the royalty business, typically an alpha business model in this space, selling Nomad to Sandstorm for what, almost 600 million US dollars, to now back to the dark side of the mining space, which is of course mineral exploration, and it's lithium nonetheless. So how come? Why come back?
Yeah, well, that's a good question. But truthfully, I think it's definitely something that's of a lot of interest to me. From the background, when I started on the corporate front, I joined the Cisco Group, which everybody knows. It had the royalty business, but it also had a lot of other investee companies, which I ended up being CFO of Falco Resources, which is still up and running today. Had a short stint with Naya Gold and a few other of we'll call them the investee companies within the Cisco Group. So from that point of view, even though I had the start of the royalty front, I also had we'll say one arm and one foot in a lot of those smaller operations. And bringing Falco to the feasibility level in 2015 and 2016 was definitely a lot of fun, and it was something that I enjoyed a lot. I would say the exploration and the development front was always something that I truly enjoyed. And when I started in the business as an investment banker, I helped a lot of companies, whether it was on the merger acquisition front or on the equity front, which were within the exploration stage or development stage. So, I always had, when we sold Nomad, obviously we really liked the royalty business, and that's always going to be something of a focus for our group. But taking hold of an asset or a portfolio of asset is definitely a big focus of ours, and definitely of mine. It's, to bring something and to develop it and to put the science into it and to de-risk it, is definitely something that I always wanted to do. So I think it's something that comes from the entrepreneurial side of, when you do things, you start small and you grow something big. Like, the last thing I'm going to say is, Comet for us is just a start. It's, right now we're sitting just under $10 million market cap. That's not the end. It's a start, and there's going to be a lot of different strategic moves to be done. When you go into these companies, you're either a buyer or you're a seller. If nobody wants to buy you, well, you better start looking for different alternatives. The last thing you want to do is just sit on your hands and do nothing and hope that someone's going to come and buy you. So the great thing for Comet, and why we stepped in as a group, is when we looked at, the company last year, at the end of the year, we saw a tremendous amount of value. There's a much larger portfolio, and just to what you just pointed out, at the moment on the website, we only talk about 2 assets. When you looked at the website a year ago, there was only 1 asset that was, talked about. It was Liberty. And then when we started doing our due diligence, looking at the opportunity, we found out they had a tremendous portfolio, which needs to be you need to surface that value, and that obviously takes time, but that's what really attracted us to get involved with Comet, is really the potential value here that we're going to be able to unlock within the next few months and years.
You also bring up a good point that the company, also as I mentioned in the overview, is it was a different company, different management, and also a company with a checkered past. When I looked into a couple of things, I raised my eyebrows a couple of times. I was like, why is Vincent getting involved in this? So I asked you, why come back to the business? But now I'm going to ask you why you come back to this specific company.
Yeah, no, so we had the way we got involved originally in Comet, we vended in one of our properties, which is the Pontax property, that's now in Comet. But about a year ago, during the lithium craze, when everything was going off the charts, we were getting a lot of calls from, whether it was Australian companies or Canadian companies with assets in Canada, saying, we'd like to buy your assets. Would you like to vend into our company? And we looked at a few different options, but things were really moving quickly. But as the year went on, we obviously saw the lithium price go back down. And as we got closer to the end of the year, some of these companies we felt were truly undervalued, and Comet was one of those, because, as you said, when we looked at the portfolio, we looked at the land package and said, okay, wait a minute. You've got Adina, who's being very, very, which was a discovery, and Winston that's being very aggressive. You've got this land package, and on top of it, on the other side, you've got Rio Tinto that just did a deal with Midland that is advancing Galilee as well. So when we looked at it, we said, there's something, not broken, but just definitely, obviously there's value there. So that was something that for us was important. So we knocked on the door, and we said, would you be interested in, merging with us? And then we'll go in on the board, and, we'll help you move the project along. Obviously, as you said, there had been a lot of different moves in 2023 for Comet. They lost their CEO originally. So they were, I would say, in an area where they didn't have a lot of guidance for a full year. So there's things that needed to be restructured, which we ended up doing by the end of the year. But now, that's what's great for us is we have a portfolio that's incredibly well situated, because we've got Liberty, which is right next to Adina and Galilee. We've got Troilus, which is right next door to Troilus East, which is right next door to right next door to Troyes Gold. And we also have our Pontax property, which today we actually got some news out of Lift Power, which they just identified one of the largest lithium anomaly in Quebec. So those are the top three assets. But then, as you pointed out, there's Grogan Northeast and New Brunswick, which nobody had talked about, which, we started doing our work. I was like, wait a minute, there's a lot of value here. So that's what's for us was the most important thing is you're not starting with moose pasture in the middle of nowhere. Like these are all very strategic pieces of land, which in the end will become, likely, hopefully a mine or part of a mine. And especially with the recent moves that we saw in the industry, there's a lot of big catalysts coming, especially in the regions where our properties are.
Hmm. And I understand you're a fan of the land package, especially in the James Bay area. I also understand why you're excited to be close to the big boys in lithium land up there. But that also maybe raises another why question. So I understand why come back to the business, why come back to the specific company, but also maybe why or how did you even get these assets in the first place into this company? As in, if the lands are as good as you hope them to be, they're clearly very good operators or already present in the area. Why didn't any of those big boys pick them up before you did?
That's a great question. Talking with some of the people that were around, there was definitely, I think, interest from, likely the Adinas or the Troilus and so on over the years. But interestingly also is that when you look at, what happened with Winsome last year, they were probably, way busier than they expected, especially that they lost a whole summer period because of the fires. So, they hadn't had time to really drill throughout the whole summer period. They really kind of came in at the end of the summer and rushed into the end of the year. So it was probably not a strategic focus of theirs at that point. Obviously, they came out with the resource at the end of the year last year. So that's something that, at that point, probably, hindsight's 2020 in a lot of these situations, right? But they obviously had enough things to deal with probably in the last 12 to 18 months. So, acquiring another land package might not have been the main focus of the company. In terms of Troilus, they're likely going to be announcing their feasibility within the next month on the project. So they've got their resource of $11.5 million ounces of gold equivalent resource, which they're focused on delivering that feasibility. That's what the market wants from them. So acquiring other land again is not a strategic, I would say it's not a strategic priority or it's not a P1 for now. But again, the most important thing as an explorer and for us is to prove the value of that piece of land as well. To say, oh, we've got a nice piece of land right next to you, pay us all this money, doesn't make sense. So you have to do the work. And again, that's what we have to do at Liberty. That's what we have to do at Troilus. And that's why we've prepared great programs for the summer on those two properties.
What exactly are you doing at Liberty this year is what I'm after figuring out here. There isn't all that much actually that I could ask given how early stage it is, but I noticed that you're going to be using Verify's AI tool. What exactly are you, maybe a good point is to start with would be what exactly you're hoping to achieve here with this AI tool.
So I'll take a step back and then we'll go into the AI because that's kind of it goes back to generating targets and to proving the value of that land package. So the great thing right now that we have within the Trieste belt, which is where Adina and Galiné and Loyal Lithium's Trieste project are located, is that you have a tremendous amount of activity. So you have Winsome has 5 drills that are currently drilling. Azimut on Galiné has 1 or 2, depending on the time in the year. Rio Tinto is putting 2 drills on likely next month with their maiden drilling program. And then Loyal Lithium has also been drilling quite aggressively in the last 6 to 8 months. So what's great is that within that 18-kilometer trend, there's a tremendous amount of activity. Everybody's drilling. So every week we're getting more assays, more data, better understanding of what's out there. So that's what really brought us to say, wait a minute, okay, we could go out and put a drill on our piece of land, but why don't we leverage all that data prior to going and putting a drill on site? Because drilling is the most expensive part of the whole program. Whereas if you're able to use AI, if you're able to, send a prospecting team and make sure that you find outcrops, or you do the proper field work and generate those targets. Once you put the drill on, then you've got a much better understanding of what you're looking for, what you're drilling, and hopefully that gets the results you want. Because as I said, we don't have a piece of land in the middle of nowhere with zero showings. We've got right now, if you look at the current results on our trend, so we own around 2.75 kilometers of trend between Adina and Galinés, Rio Tinto Midland JV. So the discovery from Rio Tinto, the southwest showing, is only a kilometer and a half east of us. And when you look at the Adina drilling, right now the closest drill hole to our border is 600 meters away. So when you look at the data, when you look at the geophysics, when you look at the mag, the LiDAR, there's a clear trend that goes right across our property. So the more we wait, the more we have info that's coming towards our borders, and the more we have a better understanding of the geology that we're dealing with. So now, to why we would decided to do a program with Verify was to take the human aspect out of the understanding, so not to have that bias. So the way the program works is it basically takes all the public available data from the companies, from the Quebec government, the CGM database, which is a large public database, and then it evaluates. Basically, it has 10 different layers of public data that you're able to basically have your algorithm learn off. And then it takes about 20% of the drilling data that's around you, figures out an algorithm. And then once the algorithm is functioning, it takes the other data and then it generates targets based on the other data. So and then after that, you apply it to your piece of land and you're able to refine it. And every time you have more data, you're able to refine it. So for example, when we started the first, data generation, we did it just on the available public info from the government. So that was our first layer. Then we added the discovery holes and the drilling from Winsome. So it generated targets. Then we added the Rio Tinto surface expressions that they found. And then we added our gravity survey that we did in December. So all of those layers keep refining targets for us. And that's how we generated the initial targets. If you look at our target map, there's a target right in, we'll call it the northeast corner of our block, which is right in line with our Rio Tinto, with the Rio Tinto discoveries. Those are things that we would likely not have focused on, but because the AI generated it, when we're going to go on site next month, we're going to go and check out that target just to make sure, is there, because when you look at it from a geology point of view, it doesn't necessarily make sense. It wouldn't be the first place you'd look, you'd look along trend. But because we added all the available data within the camp, we were able to generate that target in the middle. So it's definitely, you have to leverage the data. If you're not leveraging the data that's already publicly available, you're doing a disservice to your shareholders because you're not investing the money properly. So that's why we decided to do some machine learning. But again, the most important thing that we're going to be able to do is go on site and test and refine those targets, test and refine the gravity targets. So late last year, that's one thing we did. We did a big gravity program to basically cover the southern portion of our block. So we're going to go on site to test that. And importantly, we're also going to do a lot of prospection, and we're going to walk basically the entire southern portion of the block, which is located between Winsome and Rio Tinto, to basically leave no rock, unturned, if you want to say, because we have a bit more overburden than our neighbors. But importantly, what we have to do is make sure, there's likely more work to be done in terms of really finding outcrops. It's going to be hard work, but that's why we're here.
Hmm. How much money, or like how does it work, your payment towards verifying here? Is it on a per month basis? Is it a one-time thing? How does that work?
So for this year, we did a 1 year, software, if you want to call it, purchase, and we work with Jean-Philippe Paiement, who was ex SGS. For those of you who've been and listening, who've been in the business or heard of the Integra Challenge from a few years ago, which Integra Gold had launched. They did it a few years in a row. JP and his SGS team were the first ones to win the Integra Challenge. So he's a specialized, machine learning geologist, and I think he's also a geoscientist. So he understands these different. He's not just a math whiz or a computer whiz. He also understands the geology and understands the link between the two different worlds. So that's very important, because you want to make sure that you put the right input into the software to make sure that you have the right output.
But so how much money do you expect that's going to cost you in total this year to get those targets?
Oh, it's probably between $50,000 and $70,000 for the service.
Okay, so it's not a huge amount.
No, and that's why. I mean, for the amount that it costs you, there's no reason why not to use it. So
Yeah.
it's because it generates, and it's going to help us be prepared both for the Liberty project and also for the Troilus project. So we've now completed the AI and the machine learning targeting for Liberty. We're now starting the same program for Troilus in
And
preparation
that's
for the summer of
That's
this.
not the only thing you're using, though. I mean, you're using geophysics and geochem on top of that, and all the other traditional metrics. What are you looking for specifically? And I'm sticking to James Bay to lithium here, to Liberty, not lithium. Well, lithium too, but to Liberty. What are you looking for, and how do you prioritize targets? And when I say what are you looking for, is like, what are you looking for on the geophysical maps, and what are you looking for in the geochem?
So look, obviously, I think lithium exploration is still a very nascent, is in a nascent phase. Over the last couple of years, there's been things that have been tried, things that have worked. So, and I think every project is different. One thing that's been working very well for Winsome, our neighbor, is basically doing gravity surveys and basically trying to identify gravity lows. So if you look at the Winsome data, you see all these identified targets end up being gravity lows from their gravity surveys. So that's why at the end of last year, when we came in and we realized we had some flow through to spend, well, we decided to do a gravity survey on the entire southern portion of our block to do just that, to get more data and to see if we had gravity lows that could potentially identify pegmatite targets. So we completed that end of last year. We got the results in the first quarter, and that gave us the initial targets that we're going to be investigating next month, which is big gravity lows. The surface expressions of those gravity lows based on gravity right now are almost as large as the Jamar deposit. I'm not saying it's as big. There could be a lot of overburden. There could be things happening that are messing with the data. But at the end of the day, at this point, that's why we're going on site, is to verify that data to make sure we go and see if that potential is there. So that's what's been working really, really well in the camp. The other main thing that our team's going to be working on for that 2-week period when we're on Liberty early June is doing the QRB ratio with the PXRF gun. So we're basically going to be, running the entire southern portion of the block to make sure that, every time we see feldspat, we run the ratios. And essentially, when you're below a certain ratio, it gives you an indication of, high priority targets. So what that's going to help us do is map the entire portion of that southern block. And then after that, as we design the project for the drilling phase, we'll be able to align, maybe there's a gravity target, then a low ratio on the QRB, and maybe we've got some surface expression, like that will end up being a priority one target. So that's the idea that we're going to be doing. So I would say QRB ratio, obviously surface, leave no rock unturned and hopefully find an outcrop. Verify the gravity lows. Those are all things that are very important for us for the June program.
With those gravity lows here, are you assuming that the same geological processes formed those as what formed Adina? And would that also make sense from a geographical perspective, as in your positioning between the Trieste Formation and the Joubert intrusions?
So at this point, everything points to, Adina hopefully continuing onto our land package. Obviously, there's a few, falls cross-cutting at various places within the Trieste belt. But, yes, we see very similar features onto our land blocks versus the Adina. If you look at their project, there are pegmatite targets that are basically right onto our border. So there's a good possibility that they cross over to our land package as well.
Okay, but so when you say similar things, like for example, the lithology package or primary mineralogy here would check out on your project as well as what we would see at Adina.
Correct. Yes.
Okay. Good. When's all that program started? You mentioned that you're going to the project soon.
Yeah. So we've press released that we engaged the Rouge Consulting. So we have 6 geologists from the Rouge, plus Vincent Cardin-Tremblay, our own VP exploration, that's going to be joining them. I'll be going on site as well for the last week. So we'll have a full team, and that's one of the main things. Is it's going to be the first time that we have, basically 7 geologists on the property for over 2 weeks. So it's going to be a lot. It's not a big property, so we'll be able to do a lot of work. We'll cover obviously the southern portion. That'll be the priority one. But then along strike, the interesting thing with our property is that there's 2 main trends. There's one that goes from southwest to the northeast, that goes, and it basically follows the corridor of our block. And then there's the east to west trend that goes between Adina and Galiné. So obviously the first priority is going to be the southern portion, but then there's a big possibility also for potential discoveries along the northern trend. So that'll be the second portion of the program. But again, it's going to be a big team, and we'll be able to do a lot of work during those 2 weeks in preparation for the drilling phase.
Right. So because you say, so in the news release, you say spring is basically, well, you call it a spring summer program, but as far as I understand it, you're going to use spring to outline drill targets, and you're going to use the summer months and then potentially into the fall to drill them. Is that right?
Correct. Yeah. So right now everything's stopped for goose hunting. And then everything starts in 3 weeks from now, everything reopens. So that's when we're going on to the site.
Okay, that makes sense. What about managing forest fires? Again, last year that was a big problem there. How are you going to manage that in terms of timing?
Yeah, well, obviously that's why we wanted to get out there as quickly as possible. Because typically you have, if you look at last year, say July was when things really started going south in terms of the forest fires. I guess maybe one good thing that we have going for us is last year, the southern portion of where we're at, did have a forest fire. So, for a forest fire to, re-engage on burnt wood would be surprising. Obviously, we hope that nothing happens and that the region stays stable. But given there was a substantial fire last year, we hope that where we're at, this year's a bit better from that point of view.
Okay.
But that's something that's out of our control. So, but again, that was something that was important for us to be almost the first ones out there following the news break.
And then the total cost of the program is then also going to depend on what exactly you're going to drill. So you don't necessarily know how many meters you're going to put into it, how many drill pads and all that. You probably don't have a definitive answer on right now.
We don't have an answer, but I would say that the last thing we want to do is say a 1,000 meter program. For us, when we look at the potential program for this year, following positive outlines of the next program that we have, would likely be between 2,000 and 3,000 meters program, which would give us, say if you take half of that, 2,500 meters, be around 15 to 20 holes at say around 150 meter a hole, which is what we'd like to test. The very positive thing right now is when you look at the current costs for drillers in drilling versus last year, it's almost half. So that's a big positive versus drilling last year.
How much is it per meter?
So at this point, it's still going to be heliported, supported. So you're looking at probably between, conservatively, we'll probably say $600 a meter all in.
Okay. How much money do you have in treasury right now?
So right now, as you pointed out, we had money in trust. We have tax credits coming back. We've got so we probably have 2.2 million right now. The current surface program at Liberty, and we're actually going to be doing a big surface program at Troilus, which we could talk about as well. That's probably going to cost around $800,000. So we have, say, another 1.2, 1.3 million that could go to drilling. So we could pretty much cover that. But again, we could also readjust the program at Troilus to make it a smaller one, and then just focus on Liberty if we have, the right setting following next month's program.
Yeah, sure. But so $2.2 million in cash. So you basically haven't spent almost any money since the beginning of the year, because last financial statement that I looked into was 2.4 in cash and trusts.
Exactly. So we're keeping the money, we want to put the money into the company, into the ground. So that's something that, when we got involved, we made sure we lowered the G&A pretty much as low as possible. And right now, in terms of the employees, there's myself, there's Vincent Cardin-Tremblay, we have a CFO. But right now, everything is being managed to be as lean as possible and to put that money into the programs.
Okay, how much money would that be, as low as possible G&A? How much money do you want to spend on G&A this year?
So I would say conservatively, it's probably going to be around $500,000 to $600,000 for the full year.
Okay, so 2.2 now. If you want to do 2,000 meters, that's 1.2 on drilling alone, assays and stuff like that. Yep. Maybe if you do camp and supplies and whatnot, that would be 1.5-ish on a total program.
Yeah. So as I said, yeah. So you're probably looking at say you wanted to do 2,500 meters at $600 a meter. That's around $1.5 million Canadian all in.
Right. Oh, okay, all in. Yeah. So 1.5. Well, that leaves you with 700K basically. That's going to cover G&A. But then if you want to do work on Troilus, that means you're going to be looking at a financing. That's where I was getting at, and the mostly wondering about the how of it all. Like, how are you going to find more money? Given the state of the lithium market, the state of the juniors market, how do you approach financings?
Yeah, well, look, obviously we're located in Quebec, so we have access to several different mechanisms. There's obviously the flow through financing that's out there, but there's also the Quebec funds that are there to support. Don't forget, we got involved in October 26th, and then we ended up doing a last minute financing, if you want to say, end of last year. which we were trading probably around 50. Well, we did the hard dollar at 50 cents and we did the flow through financing at 85 cents. So, there's a lot of potential for us to do a very non-dilutive, I would say, financing. But importantly, and most importantly, is we're also located close to a lot of majors. So there are potentials for us to do different types of deals on different types of properties. So obviously, we want to make sure we surface as much value for the shareholders while minimizing dilution. So we're in discussions with a lot of different, I would say, alternative partners that could be interested in doing different types of deals with us to advance the exploration. So whether it's an earn-in on our property, whether it's a joint venture type transaction, to minimize the burden on the Comet side, but to maximize the potential gains on the exploration front.
Is that also true for all the other projects that you have going on? Like, how do you even look at them? Are you treating them more as optionality to get some money into Troilus and Liberty, or are you treating them sort of as, oh, they're on the shelf, we can keep them to have optionality to maybe potentially eventually drill them?
Yeah, well, look, obviously we came in and it was all about Liberty. And then we started looking at the portfolio of properties and we saw a lot of value, as I was saying earlier. The important thing for us is as we move the projects forward, is we want to make sure we move the exploration pyramid, as high as possible throughout. And what that means is you can't just focus on one single property. Because if tomorrow morning something happens and we go on Liberty and we find nothing, well, all of a sudden the value of the company gets hindered because it's the only thing that people thought was there. So for us, that's the important thing. Is we don't want to be just a one-trick pony, especially given the projects that we have in the company. So we've got Liberty, we're going to advance that. We've got Troilus, want to make sure we advance that because Troilus is a big property. It's 20 kilometers basically on the other side of the Parker intrusion. You've got Troilus Gold. You've got the Regnault discovery with Sumitomo and Kenorland. You've got the Mont Blanc discovery, south as well. There's a lot of big deposits, and we have a commanding position within, that camp. So there's a big amount of potential there, and that's why at the end of the summer, for the first time, there's going to be a significant program on there. We're probably going to send, we'll say it was 14 GOs and GITs cover the entire trend. Because as you point out, yes, there's gold, yes, there's copper, yes, there's lithium potential, but we need to know what we have. And it's always been worked, on very, very limited budgets. We have to cover the project to know what we have. Because when you talk to Troilus, they've been using IP and they've been very successful using IP to find traps of mineralization. When you talk to the Kenorland guys and the Sumitomo guys, they've got their, that's the way they started. They covered the entire property to find till anomalies. So that's what we're going to be doing this summer. So that's where, you have to work on building your exploration pyramid. So Liberty's top priority right now, Troilus, and as you pointed out, we've also got Greg in Northeast, which we have an option right now on. We already own 45% of the asset in New Brunswick, which is right next to Puma Gold. But we also have the Pontax project, which we got news, as I was saying today, which, based on their analysis of the data they did last summer, we understand that, our block might actually be on trend with potential pegmatite targeting down the road. So those are all things that we have to take into account and make sure we advance through that exploration pyramid.
You're bringing up an interesting point on Troilus East because it seems, well, on first glance, it just seems a little complicated. There's a gold deposit next door. The company initially intended to explore for gold, but then they found that anomalous lithium. And then there are also other often mineralogy challenged elements, so like scandium and whatnot. And So I'm just thinking, maybe talk to me more about that, what you just brought up, as to where do you even pick this up from, and how do you build an exploration program that makes sense from a capital risk reward perspective?
Yeah, so obviously we're not putting any drills on Troilus this year. Like there's no, that's not happening. But what we have to do is build a comprehension of what's happening on that land package. And as you can see, so what we did this winter is we took all the historical data and we compiled them into one, database. And what that allowed us to do is we saw the existing lines that were done, but we also saw that there was very, high grain counts and anomalous grain counts on the gold front, which when you also look at the mag, and a lot of the things actually line up. So we're actually adding two new board members at the end of the month when we go to the AGM. One of the persons that's coming on board is Mitch Wassel, who's basically a 30-year veteran with Golden Star. He spent a lot of time in Ghana, a lot of time in Brazil, and different places in the world, and he's got probably 20 million ounces of discovery under his belt. And when he looks at the data, he gets, you can see his eyes light up. He's like, wait a minute, what? We have all this? Like, how is this our second property? It might be our first property, he sees 10 million ounces right next door. So he's like, wait, these are all things that we have to do the work on. And it doesn't cost much to do that initial work. What costs a lot of money is when you start putting drills on. But if you're able to highlight and figure out what you do, then maybe you go and see a senior player or a larger player and say, hey, we've got this piece of land. It's right next to 10 million ounces of gold. It's got all the showings of another big program. Do you want to partner? So those are the steps we have to do. But again, we can't just say we've got a nice piece of land. Are you interested? If we're able to show that there's something to be worked on, then we could go out and do the right thing.
So this is also kind of a prospect generator model to all the other properties then that are not necessarily your focus right now. Like you want to work into a certain point where you can get a partner in, or maybe look for a different way to generate value for shareholders from them.
There's that, and then there's also a lot of different, we're in a market that needs consolidation. So, and as I started the conversations saying you're either a seller or you're a buyer. At one point, it makes sense to put things together to grow and have a lower cost of capital, to raise funds, have a better, shareholder registry that supports you, a higher volume, better liquidity into the market, which attracts, the larger institutional funds. So those are all things that we understand very well. Obviously, what we wanted to do first is understand what's the portfolio, what do we own, make sure the company is as clean as possible, and then start on the right basis. And again, that's what we've done in the last 5 months. And then the next few months are going to be very interesting because we're going to start getting results on a lot of these properties. And in the interim, we're going to keep getting a lot of results out of our neighbors, whether it's Troilus Gold with their feasibility, whether it's Winsome with their revised resource estimate that's coming probably in the next month as well. They've also put an option on acquiring the Renard project for the infrastructure, which is located 50 kilometers south of the Trieste belt. So that's going to be something that's very, strategic as well, because that's going to open up the region. Right now, people, talk about the James Bay as being an infrastructure challenge. Well, truthfully, if the government builds that 50-kilometer road to the Trieste belt, that opens up everything. And the interesting thing is, once it connects to Renard, then you go south and you could connect to rail. And one thing that's very important for lithium producing is having access to rail that could bring it down to port. So we're not that far. And that's if you take a 5 to 10 year outlook, the whole James Bay district is, whether it's Adina with Patriot or Mirage, those three deposits, those three camps could potentially be under the same owner. At least that's my vision of, these big producers might say, you know what, we're going to control the entire district and build, whether it's a central hub or build the infrastructure to make sure that everything connects. That's a strong possibility.
Yeah, I like the idea. I like the idea of consolidation. The talking about, well, we're kind of cross talking about your properties, but the Chibougamau district needs consolidation. There's a bunch of places in Canada that need consolidation, and we definitely need more consolidation on the issuer side and the G&A side. That's another point, maybe. But with all the other lands that you have, all the other projects that you have, does it cost you money to hold them out, or just do work on them? How does that work?
So for the stuff in New Brunswick, we're pretty much up to speed with any commitments on claims. In terms of I would say everything else in terms of contacts or obviously Liberty, we're very much up to speed on the spend. I would say Ducran, we dropped a few claims which weren't important to us. But so I would say in general, there's been enough work done in the past few years that everything's pretty much in good standing at this point.
Okay, so no major expenses from that perspective then.
Not at all.
What about community relationships? You're as the new CEO or as a new company, do you have to go there and restart conversation? Are you doing
So that
that? How
was
does that
something,
work?
obviously prior to getting involved, there had been not much communication, but what we did is prior to going to doing this program next June, we've obviously had communications with the various tallimans, making sure that they're aware of our exploration program. Obviously, right now we're not drilling, so the disturbance is minimal. But obviously, as we go forward towards the drilling stage, that's something that's going to be that's going to become more and more important and critical. The good thing is our neighbors are doing a great job also, so it's not like we're in an area where there's I would say problems or difficulties. Rio Tinto is obviously an outstanding corporate citizen in Quebec, and they do a good job. Winston has been doing a very good job also on the community front. So we want to make sure we keep benefiting from that, but we also want to make sure we don't do anything wrong to mess it up for everyone. So that's something that's very important for us as well, is to keep going forward on that front.
But the work we talked about that you want to do this year, you're all clear to go and do that. There's nothing stopping you in terms of community relations or other permits or anything else.
No, so basically right now, so we had a permit to potentially go drill because previous management wanted to drill this winter. So they had applied for a permit that expired end of March. But that's something that we will amend for the the late summer program.
Okay, good. When you, Vincent, when you came in a couple of months ago, basically, you probably came in with the idea of how long you'd like to stay for. You're probably working with some kind of a plan in your head. So maybe talk to me about that. I understand it's forward looking and all, but what's your internal desire telling you? How long will it take for you to eventually monetize this company?
As I said, you're either a buyer or you're a seller. So, and you can't just sit. So the important thing for us is to make sure we increase value for shareholders. And for people that know me, have followed me for, since I've been in mining, I'm typically more of an aggressive person. So I usually like to make things happen. So that's the way we approach things. So I don't have a time limit per se, but what I want to make sure is that things do advance, and that might require M&A deals, and that might require growing the business because you have to create that tension. You can't just say, "Oh, I'm here to sell my company and sit on it." But what I'm very conscious about also is making sure that we minimize dilution. That if we're going to be raising money, it's for something that's going to create value. So what that means is, you have to focus on making sure G&A stays as low as possible. You have to make sure the money goes into the ground. And you have to make sure that if there's moves to be done, you do them. So if there's a property that's available that's going to bring more value than what you have and it's accretive to the company, go do it. If there's something, so consolidation is something that's very important. So we're looking at a few different alternatives right now, and that's definitely something that that we always compare. It's like, do we, how's this deal going to be, different than drilling Liberty or potentially drilling Troilus, or bringing on a partner for Troilus or for another one of our properties. Those are all things that we constantly think about.
Well, one way for me to know that you mean what you're telling me here, beside looking at your track record, is knowing that you have skin in the game. Given that you only really just came in, having skin in the game is not as easy. I mean, you would have probably had to buy in the open market where you have management now owns about 30%. Obviously, not high insider ownership. Any plans to increase that? Again, there's probably
You have to include also what we own as Nomad.
Okay.
So there's another 2 million shares that we own.
Hmm.
So there's 2 million shares. I think I have now bought 250,000 shares in the market, as recently as probably a few weeks ago. So those are things that, as I keep going forward, there will be more support in the market. Importantly, also, a lot of the people that participated in the December financings were people from our network. So we know these people. There's a non-brokered financing. There was no warrants attached to the hard dollars. So these are people that are here to back us and to support us in the long term, and understand that these things don't happen overnight. And look, in general, on top of it is, I think we're in a much better situation from a lithium market point of view than where we were 3 months ago. So that's also I think we're gonna benefit from that. And when we do have a market that comes back on the lithium front, if we've done the work properly, if we've showed the value of the project, there's no reason why this stock is not at a much higher level. But you have to do the work. And so that's what we're doing this summer, and we're very excited about that.
Good. Well, I would be looking forward to seeing what you get there. Hopefully, I can get a bunch of updates in the meantime. I think I'm getting the gist of it for now. Probably forgetting to ask you a bunch of things though. What did you come here hoping to talk about that I'm failing to bring up?
Well, look, I think in general it's been very tough in the market in whether on the junior space, but I think as a global theme, whether you look at gold, copper, lithium, I'm very, very positive about the next 5 to 10 years. I truly believe that the commodity theme is going to be something that's going to be more and more on the forefront of everyone's investing thought process, because these things are becoming more and more strategic. And I think what we're going to be looking at for Comet is, yes, lithium, yes, copper, and these are strategic metals that nominally in 10 years you're going to need a lot more of, no matter what happens, no matter what we hear about in the news, China versus the West. You're going to need more lithium, and importantly is you need to supply North America with more copper, with more lithium. So that's why for me, and you were asking why I wanted to get involved in Comet, is when I looked at the portfolio, that gave us an incredible starter pack of assets to be exposed and have leverage to those commodities. There's no reason why the market doesn't come back for those metals within the next few years. Hopefully it'll take months versus years. But I'm very, very positive and very, that's the thesis for us. It's one thing to look for gold, and there's a lot of companies looking for gold, but I think the lithium side of things is very much at the nascent level. I think that's something that industry is gonna grow significantly. And importantly, I think we're going to start seeing a lot more we've seen now a lot of the Australian companies on the exploration front coming to Quebec. there will be a wave where you're going to see the exploration, the producers, the Australian producers likely get involved in Canada. So that's something that I wouldn't be surprised happens within the next few years.
Very good. Well, yeah, thank you, Vincent. I appreciate the overview here of the new company. I appreciate the background of what happened with the previous one and all these things. This was a good chat. I'll try to stay up to date. Hopefully you keep me up to date with whatever's happening there. But thank you so much for investing your time in me. I'll let you drop off now as I'll be moving to yet another request from a viewer, actually. This is a viewer requested packed episode of you, but I'll be traveling to northern Manitoba, of all places. Not to swim in swamps, hopefully, but instead to see what's happening on the Thompson Nickel Belt these days, and to talk to Misty Urbach, who's the CEO of Core Nickel Corp, a nickel exploration company. Core is a relatively new company that got listed late last year as CNCO on the CSE in Canada, where an average of about 150,000 shares trade each day, with a 52-week high of 42 cents and a 52-week low of only 2 cents. With a market cap that's currently under $2 million and about 25 million shares outstanding, today this is a 7-cent stock. Adding options and warrants to the mix would bring us up to about 39 million fully diluted shares. At the beginning of January of this year, the company had a little under $1.5 million in cash, and this is where I would typically dive into the financials and tell you all about how they spend money and their exploration to administration ratio and so on and so forth. But given how new of a company that is, it would make sense to be forward-looking here in this discussion and asking Misty about it later on instead of backward-looking. But of course, looking up and understanding the numbers is important, so that remains your responsibility. So please do head over to the company's website as well as setterplus.ca to look at all the numbers yourself. Just try and better understand what's happening here with the financials and all the rest, especially provided that this is, again, a very early stage exploration company, which, if you ask my good friend statistics, they will tell you that you need to be extra diligent here. Instead of accounting fun, though, I want to talk about nickel and Core Nickel. Core Nickel is actually a spinco. It got spun out of a company known to listeners, with that being Canalaska. And the new co now has 5 properties, 2 in the northern and 3 in the southern part of the Thompson Nickel Belt, for a total land holding of 27,000 hectares. It is on that northern part that I'll be starting today, where Core's projects sit about 20 kilometers away from the city of Thompson, and it is specifically the Mel project that I'll kick it off with. Mel has a historical, and emphasis on the historical. This was discovered in the 1960s, 1961 to be specific. But so it's got a historical resource estimate on it with 4.3 million tons of about 0.87% nickel in the indicated category and about 1 million tons of 0.84% nickel in the inferred category, which means that in total there is over 100 million pounds of contained nickel in here. But of course, the company believes they can expand that mineralization into the Hunter and Ore River projects, since both of those have not been explored extensively, as the focus was on that existing deposit in the past. So the idea for Core is to try and expand that by following the VTEM survey that Canalaska did on the properties in 2022, after, of course, doing their own ground geophysics, which should help them better pick the drill targets, which is, again, something that I hope we can discuss later on. The northern part of the Thompson Belt is not everything here, though. As I said, it's actually the south part of the belt that Core decided to drill first, completing their first ever drill program earlier last month and announcing that all 3 of their drill holes intercepted sulfide mineralization, although assays are still pending here, so I don't have grades to talk to you about. This was also only about 800 meters of drilling, so not a lot, but it was meant to follow up on drilling from, again, the 60s, which did intercept some nickel over relatively narrow intercepts here. So it's about 3 meters, but it's over 1%. I believe it's 1.5% or something along those lines. The historic hits that is, but it also intercepted this drilling that Core did, intercepted ultramafic rocks within a magnetic anomaly, and these 3 holes were all at reasonable step outs relative to that historic drilling, yet intercepting similar rocks, right? And so essentially building out the geological thesis, which was the point of this drill program. All of which, actually, as I'm walking through it here, sounds wonderful, you might think, and this actually might be a good question for you, Misty, to come in. If it's as wonderful as the website says, why is the market failing to recognize it? What do you think the market is missing here?
Yeah, so we're a spin-out from Canalaska Uranium. As you know, Canalaska is a uranium company, and we're a nickel company spinning out of a uranium company, and we spun out in November of 2023. and uranium price was going north and nickel prices were going south. So not a lot of interest in the nickel space, and folks that got the spin out shares out of Canalaska, that got the core nickel shares, likely thought, you know what, maybe nickel's not the place to be right now. I'm going to pull these out and chuck them into another uranium play or something like that. I think it would have been a lot different if we were a uranium company spinning out of a uranium company, but we were a nickel company spinning out of a uranium company at a really bad time. And we've just sort of been kind of struggling through, I call it this spin out effect because of that. Other issues have been we were spun out and also listed on the SPUT uranium miners ETF. And so they were selling us off as well. And so we've had a lot of sell-off happening, but that's all been cleaned up. And I think we're poised for a move up in the near future. We're really not well known yet. We're very, very new, as you said. We're only 6 months old in May here. May 27th will be our 6-month birthday. And so, yeah, just the awareness, getting awareness out there as well, I think will start to move us up. We're really thinly traded right now. We've got a little bit of liquidity in the market, but once we get some players in buying, I think we'll see a move up for sure.
What was the decision process behind getting on the CSE actually instead of the venture exchange? Because Canada is on the TSX fee, right?
Yes. Well, we're a bit smaller. I think that was one of the decision plays, was we're a bit smaller company. CSE might be better. It's also a little bit easier to get listed on the CSE. There's a lot more regulatory requirements that you have to go through when you're listed on the CSE, things that you need to press release and all that stuff, from what I understand. And so in summary, I think it was just an easier process to get it done. And then also, yeah, it's just a great place to be listed. Honestly, our lawyer was really familiar with the process because she'd recently done a spin out similar to ours. And so we just thought it would be a really easy streamline. And so far, since we've been listed on the CSE, I've loved the folks at the CSE. They've been extremely supportive and all that jazz. So it was a really great decision for us.
Right. Okay. It's also cheaper, I suppose, to list on the CSE.
It's a little bit cheaper as well. Exactly. And you can do a lot of the similar stuff like the OTC dual listings and all that same thing. So it's not that much different.
What I'm asking is because it's tough for us European folks to trade on the CSE under $40 million of market cap. Typically, there's a bunch of regulation there. You have to call your broker, make it happen. It's just not as easy. So where are you going and looking for those investors specifically? You said you're doing sort of an awareness campaign, if you will, or you want to bring more awareness to the story. Where are you going to be looking for those people?
Yeah, so like I said, we're very new. We're just started on the CSE, likely looking to get an OTC listing sooner than later. The cost is quite high, so just recognizing that when the timing is right. So organic growth, likely Canada, the US, we can still be traded by US, the US market as well. And then, slowly look to maybe doing some sort of European listing in the future. But as of right now, like I said, just trying to grow slow, especially considering the nickel market at the moment and how new we are. Try to preserve our cash as best as we can.
You also get I think you get a Frankfurt listing for free with an OTC listing.
Oh, so, that's lovely.
Yeah.
Good.
How much? You say it's expensive OTC. How much money are you? What's the quote, or like how much money are you looking to spend on it?
It's about $25,000. A little bit more than that, maybe somewhere around that range. So 25,000. So.
Okay. Yeah, I've heard worse. I've heard 50, I've heard 75, depending on how it is. But I don't know how.
Scary.
Yeah, so I don't know how it's going to work with the Frankfurt listing. But I think there's some sort of an arrangement between OTC and Frankfurt. That's where this comes from.
Good to know.
Not sure though, so obviously you're gonna have to check that. But good. Okay. Yeah, no, that gives me an idea. It's basically just really a new story. What are you planning in terms of marketing? Are you doing any conferences, road shows? What are you planning?
Yeah, so we were at PDAC. We had a booth there, which was awesome. Had a little bit of traction there. And so roadshows, we'll probably do a small roadshow in Toronto and see how that goes. Toronto, Montreal at the end of this month. And then not a lot happening over the summer. Likely look to get back on the road, September or October sometime. And in terms of conferences, just sort of, we're just gauging, what the conference space looks like in the nickel space, what ones make sense for us at this moment. So good. Also costs, it's expensive to go to conferences. One thing I'm very cognizant of is costs. In the nickel space here, it's not very hot right now. We're sitting at 6.5 cents. And so trying to keep our cash position really tight as possible and try to find some, cheaper marketing ways to get our name out there as best as we can. Conferencing and roadshows are expensive, so trying to pinch those pennies a little bit right now, and then maybe in September, October, we can get out and go on a full-blown marketing tour.
Good. Well, I do want to talk about pennies and dollars later on. Let's maybe just talk about the things that you're actually going to be talking about as you're doing those roadshows, which is this recent drilling. And you've intercepted sulfide mineralization at the beginning, basically. But what did you find out maybe about let's start sort of a high level. What did you find out about how the mineralization got there in the first place? What structural controls are letting the fluids in?
Sure. So as you know, the Thompson Nickel Belt, it's an ultramafic sort of sulfide play. It's a 400-kilometer belt of sulfide goodness, largely worked by Vale. And so not a lot of work has been done on our property since like the 1960s, actually the halfway property specifically. And so, we're a new spin out, just trying to get our teeth wet into our properties. We hold 27,000 hectares of land, which is quite a big land package, to get out and get rolling with. And so we decided to start with Halfway and Resting Lake for exploration projects for this year. And one of the reasons was that Canalaska had done a little bit of mag work on it before we spun out. And so we had a little bit of data there. And we also felt that there was some targets there that had been under tested by historical holders. So Falcon Bridge held it in the 1960s, and they actually drilled the W62 zone, which we focused our drilling on. It's in the southwest corner of our Halfway Lake property. And so we decided to get in here. We looked at anomalous nickel values. What's here? What is it all about? And for the most part, these southern projects are Halfway and Resting Lake projects. They're largely like the ultramafic play, more so your disseminated ultramafics. Whereas when you're in the north, you get more of the massive sulfide type play, like the Thompson style. So here in the southern part, or we call it the central, actually, the central part of the belt, we're having the bucco style mineralization, which is, like I said, that disseminated sulfides throughout the ultramafics. And so there was a couple of intercepts in these historical holes in the W62 zone at about, 100 meters, a little bit shallower than 100 meters depth in the drill core. The holes were drilled in the 60s. So the geochem was really, it was actually on paper, like written on paper. So we didn't know what methods they were using for geochemistry. Like we can't really use that data at all. It's pretty much moot at that point. And a lot of the ultramafics weren't sampled, which we thought was kind of crazy. And also the ultramafic core was missing from the core yard as well. So when we went to go look at it to do the 43-101 before we spun out the company, the core was actually not there. So we thought, let's go in here and see what it all looks like. And so when we put some cross sections together and really looked at the geology, one thing we really noticed was that the Falcon Bridge folks didn't actually adequately test the sulfide mineralization that they intersected down dip. And it was pretty much open down dip. And so we're like, this is a great place to go and test. And it was pretty open. Like you said, we did some pretty decent step outs. So because we weren't too sure what the old holes were actually intersecting in terms of geochemistry, what we decided to do was we had two holes on a strike line essentially, and we decided to split the difference. They were 70 meters apart. We split the difference. We drilled that hole. We did hit some sulfides in that, largely disseminated in the ultramafics. And then we knew where we were going. We kind of knew what the stratigraphy looked like. And then we drilled down dip from that and to get a really good understanding what that down dip play looks like. And so we also hit sulfides in that as well. As you said, we're waiting on assays, which we're keenly waiting on, hopefully coming soon. And so then we decided to step along strike of that down dip hole and a little bit further along strike. I think it was about 150 meters along strike, and do another down dip style hole. And we intersected some massive sulfides in there, less ultramafics actually in that one, and about 7 meters of semi-massive to massive sulfides. So really exciting. And I think one of the biggest things that we really learned from the program that we did this year was that, we have 27,000 hectares of land that's been worked in the 1960s mostly. There's some of it that was worked in the 1970s, but there's a lot of potential for these historical areas on top of, lots of blue sky potential as well. And so Really, following that as a mentality is like, don't let the data that you already have, go to waste. It's always good to go back and look at it. And we've got a lot of data on paper, so we're working on digitizing it, but working on, trying to build up these geological models in these other areas and work out, is there something we can go test that wasn't tested appropriately? And then also do those blue sky potential tests.
But you don't have any core that you can go and relog anywhere on the property now.
There is core, yep. It's just really, some of the areas are really scattered. So some of the holes are missing pieces. So like I said, the ultramafics in the W62 zone are actually missing and they didn't sample them. So there are some historical holes and we plan on doing that this summer. Now that we've drilled the W62 zone, we want to go out and core map with the older holes because it was winter time. We couldn't really pull them out. Core map with the older holes, and then also look at other targets on the halfway and Resting Lake property as well. And then, as you mentioned, our Mel property, we plan on going out and doing some core mapping on Mel as well, because we have all the Mel core, most of it, all the good stuff. So lots of just core mapping and really wrapping our heads around the geological framework of these projects.
You've also mentioned that for Mel specifically, a geological comparison would be birch tree. Is that true for the other properties on the other end of the belt as well?
So the Mel property itself, I guess Mel could kind of be birch tree or Thompson style a little bit, one or the other. So the property in our halfway and Resting property would be more like the pipe deposit, where it's largely in the ultramafics, disseminated in the ultramafics. And there, you do have veinlets of massive to semi-massive sulfides when we're talking about the pipe formation. So I think the pipe deposit, the South Thompson or Central Thompson, we call it. Sorry, we started calling it the South, now we call it the Central. Our Central Thompson is largely that disseminated style ultramafic type mineralization. Whereas in the North, you're starting to see more of the like birch tree, also Thompson style, where you're disassociating the sulfide with the ultramafics due to deformation events and things like that.
You're mentioning that in the South or the Central Thompson that you have those properties that you drilled. You mentioned disseminated sulfides. Would that necessarily mean they're lower grade, or how do you look at that?
Yeah, so disseminated, it's still really good. One thing I've learned about being in nickel, it seems like these ultramafic disseminated type deposits are really hot right now, which is awesome. And it's not higher grade. So when you're seeing like the Thompson style mineralization, you're getting some squeezing action, some remobilization, and they're focusing in, say, like these D3, 2 or 3 folds, I'm not really sure, but these fold hinges, so they get remobilized and sort of concentrated. Whereas in our disseminated ultramafic bodies, it's more like kind of floating in space, more or less. So it's not as concentrated. So, from a mining perspective, you would want like the more massive style because it's easier to mine higher grades. I would say also the ultramafics are lower grade for sure as well. So you've got the disseminated piece that adds to that lower grade factor.
Okay. Why I'm asking that is because I'm just thinking in relation to what I asked you previously is what is the market missing? How do you tell the story? And so I'm trying to understand why you decided to go to the central part or the south part of the belt first, knowing that it's disseminated, knowing that it could be disseminated based on previous drilling, and given that it could be lower grade. Why not go to the north, get some higher grades, and go promote that into the market?
Right. I know, right? A lot of folks ask us that question. So Canalaska, I always say but Canalaska purchased Mel in May of 2023. And we were working hard and tirelessly on spinning out core nickel, basically. And so we haven't had a lot of time to put thought, core mapping, value, build some geological models out up in the northern area. And so we were like, we could easily go up and drill duplicate a hole that hit anomalous nickel on the Mel property, but like we just really feel that's where we wanted to put the value. We really wanted to put some thought into it before getting up there. So prior to purchasing Mel, we held the Hunter and Odi River properties up there as well, and so Hunter's had a little bit of work on it. As you'd mentioned, Canalaska did a VTEM survey before we spun the company out. They picked up Odi River after the VTEM survey. And so Odi River hasn't had a lot of work either. And so we kind of thought, let's really tackle the north as like one big piece. So we really wanted to like get some VTEM over all the properties. Our biggest plan is to get some VTEM over all of our properties, but in the north, do the VTEM over Odi and Mel, and really start to do the core mapping, build a geological framework, do some geological modeling. Like I said, our data is on paper. And so we're really focusing on getting these into a digital framework where we can work with it. Whereas Halfway had Kazakhstan did a lot of work on it prior to us spinning out. So we had the data at our hands. We also felt that there is still potential for massive sulfide mineralization on Halfway Lake. And the Manitoba Geological Survey recently did some mapping of the Halfway Lake deposit area. There's a deposit in the northeastern part of our property called the Halfway Lake deposit. It just sits off of our property. It's owned by Can Nickel. And so they actually did a geological mapping program around there and indicated that it's quite likely that, the Thompson style mineralization can be found on the Halfway Lake property. And so that was really intriguing to us. So we thought, let's go out and see, let's go see if we can actually have a Thompson style deposit on this Halfway Lake property, so it might be kind of in the middle of the two styles of mineralization. In the north, you get that Thompson style. In the south, you get the more disseminated, and pipe's kind of in between. So
So how
Yes.
long do you think it's going to take you before you can drill in the north?
We're hoping by 2025, depending on how the market goes in, the nickel market, our share price, if we want to start to raise some more cash, we would likely, the first thing we would do is put a VTEM survey over Mel and Mel and Odi, and then sort of get them stitched together, put it all together, and then plan for drilling it right after that. So hopefully January of 2025.
Okay, fair enough. I'm going in the direction of understanding how your money's going to work. And in that context, you had set out to drill 1,000 meters, I believe, but you came a bit short. Was it only 800 meters? How come?
Well, we kind of thought, 400 meters a hole, just on average. We weren't really sure how deep we'd have to drill. And so we just ended up cutting the holes a little bit shorter because really we were just cutting stratigraphy that we'd already cut or we already knew what was happening. So we just chopped the holes a little bit shorter and it ended up being the 800 meters.
Okay. How much money did that cost to your meter?
A cost per meter was about, a little bit shy of $100 a meter for drilling costs, but I think all in cost would be about $120 a meter.
100, that's not a lot. Okay.
No, we had pretty good meter.
Would have thought it's way more. But so what do you spend $100,000 on that drill program?
It was about 100 and what was it? All up, just the drilling itself, I think was about 130 maybe with mob, demob, and all that jazz.
Okay, 130. So how much money do you have left now?
We're just sitting a little bit north of 1 million, $1 million after doing the drilling. And then we're rolling right into a VTEM survey here moving into the summer, which is a part of our yearly plan for Halfway and Resting Lake. And we also were really lucky. So when we spun out of Kazakhstan, we had $1 million cash. They gave us $1 million. And then we did a small raise at the end of the year to get us some flow dollars in, so we didn't have to spend our hard dollars. We got about 391K, so a little bit shy of 400K. And then we got a grant from the Manitoba Mineral Development Fund, which is a non-repayable grant for $207,000. And so we've kind of been able to capitalize on this grant money as well. So we've been able to get some of our drilling done a little bit cheaper, I guess one would say, because it was, free dollars that we don't have to pay back. And we'll be using some of that money as well going into the drilling. So we've managed to kind of keep our cash position pretty good because of that. And those payments kind of come in every 3 months or so. It's set on a payment schedule or whatever. So it's like $70,000 that we get bumped into our bank account, which has helped a ton. And so, yeah, we're sitting pretty good for cash. Like I said, we're just a little bit shy, or we're just a little bit over $1 million after the drilling. And then we'll be looking at spending some cash moving into the summer on the VTEM survey, moving forward.
I wish I was spun out of Kazakhstan because they gave you $1 million and then Manitoba gave you a bunch of money. I wish they'd do that to me too. That'd be very kind.
I know. We got really, really lucky. The Manitoba Mineral Development Fund is really great for any explorers in Manitoba. It's a huge benefit and they're really helpful and wonderful to work with.
How much money is a VTEM going to cost you?
VTEM is going to be about $200,000.
Okay.
For the Halfway and Resting Lake properties.
But then you're left with, call it $800,000.
Yes.
I am heavily hoping that's going to cover G&A.
Yeah.
How much money are you budgeting for G&A?
We're running at about $30,000 a month for overhead rates. So we're pretty tight. It's just me and my VP working for core at the moment. And we went out and did the drill program together. Her and I actually went to the field together. I hadn't logged core in like 5 years. So I was like, oh, let's keep it cheap. I'll get out and do some core logging and some geoteching and some core box lifting. And so we've been really just trying to cut the costs because we have been struggling a little bit from the spin out. And so, yeah, just trying to keep things in. So we're sitting about 30K overhead, probably a little bit shy of that actually. And so, yeah, we're just trying to keep those costs down as best as we can, try to ride it out as long as we can here. Recognize we'll have to go to the market at some point, but we're really agile because we're so tiny that we can sort of maneuver when we need to be in and when we want to be in.
Okay. But the 30 grand. Okay, so you would have spent about 120 by now, so then you're left spending 240 more this year, which is gonna leave you with, call it 560, 600 grand, something among those lines. Again, this drill program costed you between 100 and 150. Sounds like you have enough money to do another drill program, but it doesn't sound like you're planning another one this year.
No, so it's really hard to drill. Like you said in the beginning, the Manitoba area is very swampy. And so, we could go out and drill, but we'd have to do a helicopter supported drilling, which is really, really expensive. So, and also Halfway Lake is where we would likely go back to, and it's currently under a lake, so we can't drill in the summer. So it's really hard to drill in northern Manitoba in the summer. So our kind of goal is to, really focus on doing the geophysics, building up our geological models over the summer and the fall and the winter. So when we get into 2025, we're ready to hit the ground running with a drill program.
Right. Okay. Well, so how do you look at raising capital then in the meantime? As again, you mentioned tough times to raise capital right now. The nickel market's not doing amazingly. Juniors are not doing amazingly. There's this whole tax thing going on in Canada and a bunch of uncertainty around that. So are you thinking traditional capital raises? Are you doing something friends and family? Are you hoping for more grants? Talk to me about money.
Yeah, so likely just traditional capital raises, some small private placements. One of the things, like I said, we're trying to be really agile. So if, we do need a little bit of cash, go to the market. We don't need to raise, millions of dollars. And it just might be, another 300, 400, 500 here and there. Really, just to get through the year and start to get some momentum going. And also the Manitoba Mineral Development Fund is still a thing. They're looking at renewing it for 2025. So we'll likely still have access to that as well. So that's really great. And yeah, now that we kind of understand how the program works, I think we're definitely going to apply again and again and again, as many times as we can, essentially. So the grant money is definitely a great way to, not have to go to the market and pick up cash.
Yeah. But you don't necessarily have to, right? I mean, we talked about $1 million now, minus V10 would put you at 800, minus G&A would put you between 500 to 600. You're not doing drilling, so you don't necessarily have to go and raise capital this year.
No, we don't have to at all.
Okay. Yeah, fair point. And then maybe are you thinking of starting the drill program in 2025, seeing what comes out of the ground and hopefully create momentum with that drilling as well, and then go back to the market?
Yeah. So I guess one of the good things about having the summer to go out and build geological models and stories, like we're definitely going to have some breakthrough. Hopefully we have some breakthrough, geology to bring to the market before we go out and drill to support the program, depending on how much we want to drill, how big of a program we want to do in 2025. So I think that's one of our biggest things is like, we really want to go and like build the story up before we go and put a hole in the ground. And spend that money because it's expensive to drill holes. And we want to make sure we're putting them in the right spots. And so our biggest plan was by the end of the year is to have BTEM over all 5 of our properties so we can look at our properties from a portfolio basis. So we did the spin out. We got really lucky. We've got a great project on Halfway Lake and we were super successful this winter on the drilling. But we want to look at the projects from a portfolio basis. So when we have that portfolio basis, we've got our core mapping. We understand all 5 of our properties. Go to the market and say, this is what we have. This is the potential we have. Right now, we can say we have potential, but we really need to put our boots on the ground and spend a lot of time building up the portfolio more. And I think we'll have a lot to go forward just from the work that we're going to do this summer, really compiling what we have.
Right. Okay. Fair point. You also have, I'm just thinking about, still kind of stuck on financing, says and who finances this, but you have a news release, your last news release about Paul Reed, who's
Yes.
apparently participated heavily in your first financing there, and then also bought 1 million shares in the
Yes.
open market. He now owns almost 13% of the company. What's
Mhm.
the relationship there? What are Paul's plans?
Yeah, so Paul came into our first private placement. I got connected to him through a broker. And yeah, Paul, I think, was just really interested in the story because, we're new, we're a small company. Paul's a really big, startup kind of guy. He's done the Arizona Metals thing, and he's really, I think he saw potential in, the Thompson Nickel Belt itself, and also the properties that we held, and the fact that we also have an asset on the books too. So yeah, and at that point, it was really only me on the team. So I want to say he was, really gung-ho about management, but I don't want to be behind myself or anything. So and Paul, yeah, he came into our raise and it was great. He came in a huge way in the raise. And then when we had the news released on, I think it was April 8th or 9th or something, he bought 1 million shares in the market. And that really helped kind of clean up some of those SPUT ETF shares that were getting dumped into the market. So he got really lucky and got all of his 1 million shares that he bought at 5 cents. So it was awesome. And he's been a great supporter of Core. And yeah, we're really thankful to have Paul. He's mostly on the team, right? He's kind of on a team member now at this point. So he owns 12.9% of us, I think, partially diluted, and he's 9.98% just of common shares.
Okay. Oh, 9%. Oh, okay. Got it. Options, warrants,
So
and all
he's
that.
like 0.02% of not being an insider at this point.
Okay.
Yeah.
Who else owns shares here? How many shares do you own, management, and everybody else?
Sure. So I own, I think, 1.2% of Core at this point. Being a spin out is really hard. You have to buy it in the market just like everybody else. It's not like a IPO where you can get some cheap shares at the beginning. So I've just been dipping into the market, buying where I can. I got really lucky again and bought, $20,000 worth of shares at 5 cents when the SPUT ETF was dumping us out as well. And I think all up, we're probably sitting at about 2 to 3% management all up. And then the large shareholder base, we're a spin out from Canalaska. Canalaska has been around for a really long time. They have a lot of retail-based investors. So not sure how many of them stuck around for Core after the spin, but we likely have a lot of, that type of retail investment investors type.
Right. Are you planning on, do you have personally the ability and other team members, do you have the ability to support the stock in the open market?
Yes. It's just at the moment, we're waiting for assays and don't feel it's right to go out to the open market on a blackout, one would say. So yeah, we do have the capacity to do that. It's just we've been haven't had a chance because we've been busy.
Good. Yeah. Well, blacking yourself out is important. I get that part.
Yeah.
Just wondering, sort of in the future, like you never know what happens again to the market or to nickel. There's a bunch of uncertainty. So, are you ready there to sort of support the story as it develops? It still is not easy to deal with it, given the market cap of the company and financing the company forward. One way that I've noticed companies doing it, or at least from the companies I'm interviewing, is getting a strategic in, where they're diluting at the asset level, basically letting someone pay for the drilling as a sort of an option earning, or some of the companies are dropping their other project and so on and so forth. We have 5 projects, so we have room to do both of those, or at least one of those. Do you have any plans of working towards something like that?
Yeah, of course, we would love a strategic investor of some sort. We're still really new, so we're working on those types of relationships. And yeah, as you mentioned, we've got, like I said, we have 27,000 hectares of land. And that's sort of why we want to get our teeth into these and really look at the portfolio, look at the 5 properties from a portfolio perspective, is to really understand like what we want to keep as ours, maybe what we want to JBL, what we want to partner into. And we don't want to go into that without knowing, what are our best properties moving forward. So that's sort of the plan by the end of the year, is really understand these from a portfolio perspective.
Right. Okay. And then communities and everybody around and on the property, everybody happy up there? What you doing work?
Yeah, so we've got the Woboden community, where our Halfway and Rusting Lake properties are, they are really great and really supportive for us getting in there. And in the north, we've got NCN, which is a great group of folks. You know, we've been in touch with them. We are working towards an agreement with them at the moment. And yeah, just really great people.
Okay, but so you haven't had to sign anything yet, but you have approached them, you have spoken to them, said, hey, if we ever come here drilling, are you going to be happy with that? And they said yes.
Yep, exactly. And we're just working through an agreement with them at the moment.
Okay, good. Well, then from here on, specifically, what's the next news release going to be?
Well, we're waiting on assays, so patiently waiting on assays. That's one thing about being in uranium. You at least have, you know, gamma probes and things like that. In the nickel space, you got to wait for assays. So we're being really patient, waiting on assays. That would probably be the next one that we're waiting on. And then, like I said, we're going to be mobilizing a geophysical crew out. Likely have some news flow around that once they're out, and some targets that come out of that. Yeah, so I'd say those would be the two biggest ones in the next couple of months.
We're saying months, but you had when did you complete drilling? Beginning of April. It's been 4 weeks, so by the end of this month, assay results. Does that sound reasonable?
Hopefully soon. Yep, hopefully by the end of the month at the latest.
Yeah, fine.
Yeah.
Good. Well, it sounds like that would also be a good point maybe to catch up. But I think I'm on a lot of questions here. New story again, so not a whole lot to talk about, but I think I've been through most of my questions. What am I forgetting to ask you though? What would you have liked to talk about?
Yeah, I guess thanks so much for having me on, Antonio. Like we're trying to get out and get some marketing. So this is really great exposure, and I know you've got really good exposure. So really appreciate your time.